This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. From Boston, Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. Mr. Barr on assignment. Lisa Mateo in New York, I believe, this morning.
I believe with,
New York or Turks and Caicos.
Yes, exactly.
Tucker. We'll see which. But we are here, and we are here at one of the most beautiful buildings in America. They built it in 1977. Hugh Stebbins is the architect. And it is the extraordinary Boston Fed building. It's iconic. I put it out on Twitter and LinkedIn this morning. We're here in celebration of their 68th conference. They've been doing this a long time. The future of finance. The smartest people in America on taking money from Paul Sweeney every month. They are here. I mean, it's a world turned upside down. I was at Davos years ago, and I thought this was a joke. And boy, was my head turned around about digital and what it means for our finances.
Yeah, absolutely. We got some really smart economists here at the Boston Fed, Tom, and they have doing a lot of research on, new fintech trends in the marketplace, payments, just how money moves around our economic system.
Well, we're going to have to see on that. And, of course, the world turned upside down by this trifecta election. Republicans taking the House, of course, taking the Senate, and Mr. Trump holding court at Mar-a-Lago with announcements through the day. Look to Balance of Power at 12 noon today for a full summary of where we are in the election. I guess the rally's over within the data check. I'm going to let Lisa do the data check.
It was a heck of a run there for the last 6-7 trading sessions.
And even BitDog turned back.
Yeah, but we got a little bit. We're pushing up against 90,000 for Bitcoin. We stay on top of that for you, Tom.
We'll see. We've got some great guests for you today. Jurrien Timmer of Fidelity will be out. He's been on fire with an analysis of the market. Jeff Bookbinder, LPL, will be with us in a moment. I need to go to New York because she is holding court on the data check today. With the Interactive Brokers Studio, Bloomberg Business Flash, here's Lisa Mateo.
You got it. We've got futures falling. Traders are waiting some more economic data. Economists looking for steady growth in today's U.S. retail sales report. Amazon Prime Day likely to provide a lift to online sales. We shall see. Also on today's agenda, October industrial production. Now, the since resolved Boeing strike, that could weigh on the data. That comes out at 8:30 Wall Street time. Over to futures. NASDAQ futures down 0.7%, 164 points. Dow futures down 0.3%, 169 points. S&P futures down about 0.5% or 31 points. To the bond market, the 2-year yield 4.31%. That's down 3 basis points. The yield on the 10-year 4.43%. And that is little changed. To currencies, the dollar broke its 5-day winning streak. We have the Bloomberg Dollar Spot Index right now down about 0.2%. We have the Japanese yen higher, euro stronger, euro British pound stronger. We have Bitcoin. This is for Tom, up nearly 2% at around 89,000. Warren Buffett's Berkshire Hathaway. That's where we're starting. It's taking a slice out of Domino's Pizza, buying 1.3 million shares of the chain in the third quarter. Now, it also disclosed a new position in Pool Corp. So right now we have Domino's up 7%, Pool Corp up 6%. Meanwhile, Berkshire slashed its stake in Ulta Beauty, which is down 4%, cut holdings in Capital One and Charter Communications as well. And finally, shares of Applied Materials down 7%. The largest U.S. maker of chip manufacturing equipment, well, gave a disappointing revenue forecast. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. Bloomberg Surveillance this morning across this nation from Boston and New York City were brought to you by BNY. BNY's expertise and insight can help clients achieve their ambitions. Visit BNY.com. We start strong in Boston with an analysis of where we are in this election. LPL, iconic in Boston for their advisors to people across the nation. Jeff Bookbinder is Chief Equity Strategist for LPL. What are you hearing from LPL associates and your clients at LPL about now what after the election? Not what you think. What do the LPL clients think?
Yeah, I think overall the clients are fairly optimistic. You know, we're hearing that they're comfortable.
They're not calling up and saying, go to cash.
They're not saying that. We certainly heard that quite a bit over the last year or two. Not so much now. We've got a strong economy. We've got rising corporate profits. We've got a bull market that's still relatively young by historical standards. We think this market may have a little bit more to go. Now, that doesn't mean we're not going to have some volatility here, right? Because, we've been expecting a pullback, maybe something in the neighborhood of 5 to 10% for quite some time. Didn't get it pre-election on policy uncertainty. Maybe it's just been delayed, and it comes around concerns about tariffs, comes around maybe some doubt about whether we're going to get tax cuts. Maybe some of these cabinet appointments cause some volatility. There's geopolitical threats, of course, that we're all aware of. So we're telling clients to stay with this market, but just be wary that you might get some dips here that could potentially create even more attractive opportunities.
So we had, really a risk-on feel ever since the election of just 8 or 9 days ago. Certainly a pop in risk assets, whether it's stocks or even crypto. We had, Bitcoin pushing up against 90,000
there you go.
here.
It's 7.
Exactly.
It's 7:03, and you're talking BitDog
already talking to Bitcoin. Earnings. Are the earnings there to support this market from your perspective?
The earnings growth right now this quarter is going to be about 8%. If you back out the big charge from Apple, declines from Boeing, that's a solid number, and that actually might be a trough here. We might actually see double-digit earnings growth for the next 3-4 quarters. That can still come in below consensus expectations. We think those estimates are too high, like many of certainly my peers do. But anything right around 10% earnings growth here for the next several quarters, we think that can support this market. Valuations are high. You need those earnings to come through. And certainly big tech, the Mag 7 names, they're going to drive the bus. But we're going to get more and more help from the rest of the market, the S&P 493 here, we think, over the next several quarters.
How about financials? There's been a sense here that, some of the regulatory overhang for the big financials, that may be reduced under a Republican move in Washington. Do you ascribe to that?
Yes, we do. Heard Jamie Dimon on your network just talking about that, about bankers dancing in the streets. The regulatory environment is going to be more favorable for the banks, certainly. The economic environment helps, of course. They want to see more lending.
Yep.
The steeper yield curve helps, right? The Fed is still going to cut, maybe slower than we had thought, but they're still going to cut. That's a pretty good environment for banks.
There's $7 trillion in money market funds. 6.25 of that's at LPL Financial. What do people do when they move money market funds? Do they take a risk and go out to a 3-month T-bill, or do they actually load up on NVIDIA? What's the history of that you see at LPL Financial?
We're all about asset allocation and diversification.
Yeah, but what are we doing with that cash? $7 trillion? Is that a market mover over the next 18 months?
That's certainly going to provide some support, sure. Maybe some of that money is going into the bond market, chasing potentially slightly higher yields. But, that'll trickle into the equity market over time. It takes a while. That money, based on history, moves pretty slowly. But that money market asset pile can certainly help this market stay afloat and limit the volatility, right? Allow these pullbacks to be bought.
How about energy here? Presumably, I'm just looking at some of these appointments that we're seeing across the cabinet from President-elect Trump. One could argue that this is going to be pretty good for the energy sector. However, some people say if you go to this drill, baby, drill kind of scenario, that's too much supply for the marketplace.
Yeah, I was actually thinking about this.
I don't know how that works.
Nathan Hager, the economist here, half an hour ago brought this up.
How do you think about energy?
Are we going to get $40 oil?
Well, we're going to get more production, and more supply means lower prices, all else equal. I think when you think about energy, you certainly have to think China. Right, that's where a lot of the demand comes, and their growth has been lackluster. Maybe that economy is growing 3 to 4% right now. That might even be optimistic. You get more drill, baby, drill, and so that's extra supply. Right. And then, you still have this alternative energy push that over the next year or two could put some pressure. We don't think the environment for oil looks that great.
One final question. We had Yardeni on. He's outstanding. He's talking about his 7% vector out to what? SPX, 10,000, whatever.
2030.
Can you give me a 12 months out Standard & Poor's level so we can remember that when we return in 12 months?
Well, I think you want to look at earnings growth to guide you. And if we do get around 10% earnings growth, then that maybe is your base case of S&P 500 returns. We haven't published our official target yet, but something in the neighborhood of 6,400, 6,500 in 12 months is a reasonable fair value.
Jeff, thanks for starting strong with us. Jeff Bookbinder with us with LPL Financial.
We are
in Boston here at the Duke guy.
Is it Duke MBA? Got to put the plug in there.
Got to put there. It is from Duke University in Northwestern as well. Speaking of those academics, we're at the Boston Fed Conference in support of 92.9 FM in Boston on your morning commute across the nation. With our news in New York City, here's John Tucker.
All right, thanks, Tom. Paul, Lisa, President-elect Donald Trump making another controversial choice to fill his cabinet, naming Robert F. Kennedy Jr. to lead the Department of Health and Human Services. Trump making it official at Mar-a-Lago, a gala last night.
We want you to come up with things and ideas and what you've been talking about for a long time, and I think you're going to do some unbelievable thing. Nobody's going to be able to do it like you.
President-elect Trump's decision puts a prominent vaccine skeptic and critic of the pharma industry in charge of federal health policy. Kennedy's views on vaccines and support for things like raw milk and removing fluoride from the water could help set him up for a tough Senate confirmation. Donald Trump still hasn't announced his pick to be the next Treasury Secretary, but one name that's not on his list, Jamie Dimon. The president-elect ruling out the J.P. Morgan Chase CEO in a Truth Social post, saying he respects Dimon greatly, but he won't be invited into the Trump administration. Dimon, for his part, says he's okay with that.
I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
Jamie Dimon speaking with Bloomberg's Lisa Abramowitz at the APEC CEO Summit in Peru. Incoming Senate Majority Leader John Thune says all options are on the table to clear President-elect Donald Trump's nominees, including allowing them to take their jobs without Senate confirmation. Thune, a South Dakota Republican, said during a Fox News interview, hopefully it doesn't get to that. Trump's nominations of Matt Gaetz for Attorney General and vaccine skeptic Robert Kennedy for Secretary of the Department of Health and Human Services have drawn criticism from Republicans as well as Democrats. And Elon Musk ramping up his feud with Sam Altman, alleging in a court filing that OpenAI is trying to corner the market for generative AI and sacrificing safety in a race to get ahead. In a revised version of a lawsuit he filed in August, Musk highlighted antitrust concerns about OpenAI's journey from its nonprofit roots to its current effort to restructure as a for-profit company. At Global News, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
John Tucker, thank you so much. The Future Finance up here in Boston, the Boston Fed, beautiful building, crisp. It's a crisp autumnal morning.
Yeah, in New England. Absolutely perfect.
Great. I was watching the Bruins in Dallas last night. They're not the Bruins that we remember. I learned that the hard way watching, 10 minutes of hockey. How about this, Paul? New financial technologies, boon or bane of small businesses?
Oh, man, you better embrace technology, I think. And that kind of sets some of the bigger banks apart from some of the smaller banks. You can't make those investments.
And with Lisa's important interview, Lisa Abramowitz's important interview with James Dimon in Peru, I think it really, centers on that dichotomy we see within finance. One of the themes here in Boston, we say good morning, 92.9 FM. Across the nation on Apple Play, CarPlay, we say Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. All right, traders, they are trimming their expectations for December Fed rate cut after Chair Jay Powell said, quote, the remarkably good U.S. economy leaves room to ease a little bit more carefully. So right now we have NASDAQ futures down 0.7%, 157 points. Dow futures down 0.3%, 161 points. S&P futures down 0.5% or 30 points. We have the 2-year yield at 4.31%. That's down 2 basis points. The yield on the 10-year 4.44%, and that is little changed. Over to currencies, the Bloomberg dollar spot index right now down about 0.3%. We have the Japanese yen stronger, euro stronger, British pound also stronger. Heading over to commodities, we have Brent crude at $72 a barrel. That's down about 0.2%. WTI crude $68 a barrel, and we have spot gold at $2,566 an ounce. Vaccine makers including Pfizer, Moderna, BioNTech, well, they traded lower before the bell, and this is after President-elect Donald Trump picked vaccine skeptic Robert F. Kennedy Jr. for health secretary. So now we have Pfizer down about 0.5%, Moderna down about 1%, BioNTech, those ADRs down nearly 2%. Shares of Palantir up more than 2%. The company said its New York Stock Exchange listing will end at market close on November 25th, with NASDAQ trading starting the next day. And finally, shares of Alibaba on the rise, ADRs up more than 3%. The company said to be considering offering $5 billion of bonds as soon as this month. Now it also reported second quarter adjusted EBITDA, adjusted net income came in ahead of estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Paul Sweeney and Tom Keene here in Boston at the 68th meeting of the Boston Federal Reserve. The highlight, I'm told today, is that Susan Collins will be in conversation with our Michael McKee. That will become later in the morning. We'll stay around for that. We're coming. You came up on the Gulf Stream,
sure.
So you don't care. I got to race the Logan to get back in time. The secret is the real interview of the day is right now. We welcome all of you across the nation on your morning commute. Of course, on YouTube, subscribe to Bloomberg Podcast because it is our new technological change. She is the queen of technological change within consumption in America. Joanna Stavins is senior economist, policy advisor at the Federal Reserve at Boston, and she's held the high ground for decades on what do we do. We used to have paper checks.
We still do.
We have paper checks, but I write one a month.
Yes.
You know, Ken Rogoff at Harvard has said cash may go away. In that wonderful book, The Curse of Cash, years ago. Are paper checks going to ever go away?
I hope not.
It's a wonderful feeling now to write one out.
Exactly, yes. I think people are used to their payment habits. And what we found out in our research over the decades of interviewing consumers and doing consumer surveys is that technology develops much faster than people's payment habits. So there's a lot of inertia. And I am personally an advocate of giving consumers a choice. So more payment method and new technology is great, but there's no reason to take away paper checks.
I sat in Davos at a conference. I was the moderator of the conference. Hildenbrand was there from the Swiss National Bank and other worthies. And I completely misjudged your world because I'm an ugly American who's still writing out paper checks. Is America right now in digital finance and consumer behavior? Are we behind still? Or have we caught up with the world on modern technology and payments?
I think we're always behind. Well, depends who you're comparing to, but we're always behind some of the European and Asian countries for sure in terms of technology, in part because we're so large. We have 9,000 financial institutions, so coordinating among them is a lot more challenging than, small countries that have, a handful of banks. And also, we've had paper checks for many, many decades, over 100 years. So other countries didn't have the benefit or the liability, however you look at it, of having paper checks, and therefore they don't have to eliminate them. So we have those long ingrained payment habits. Those are some of the reasons why we're so different from other countries.
What is buy now, pay later? How does that affect their behavior?
Well, so buy now, pay later allows consumer to spread their transactions typically into 4 installments in a short period of time. So it's sort of a short-term credit.
Okay.
I think that it's been extremely beneficial to some consumers who are liquidity constrained, but it's also risky because consumers take on more debt. What I found in my research is that the vast majority of consumers who use buy now, pay later already have credit card debt.
Okay.
So they are at risk of potentially piling up one debt on
Who
top
takes
of
that
another.
credit risk?
That's not really clear. I think
my
it's
point.
still,
Yeah.
yes. I think we're still in the process. The system is being developed. And I think it doesn't help that it comes under so many different names, and consumers might not necessarily realize what they're getting into.
He's my hero. Paul Sweeney's my hero. Just so you know, out on YouTube and across the nation, Paul Sweeney's my hero. He screams at his kids every month, pay off your charge cards.
I do the same thing.
Do you?
Absolutely.
You guys are brilliant. How are our kids doing with credit? Have they changed their behavior after 3 once-in-a-lifetime events? 07, 08, something else I can't remember, though the Red Sox collapsed. And the third one was the pandemic. Are our kids doing better at payments than we were?
I don't think necessarily they're doing better, and it's not always by generation. So there are certainly demographic differences, but I'm not sure that it's improving over time. And I think having more options is exciting, but it's also risky. So that's one of the reasons for our conference, is to realize that there are opportunities and potential risks with all new technologies. And marketing is great. You know, there's Venmo, there's Zelle, there's PayPal, there's all these exciting things, but it may be risky for consumers.
It just feels like, I mean, the pandemic, I think, accelerated the adoption, at least for me, people like me perhaps, the adoption of digital opportunities. So now I can't even think about a scenario where I'd go into a bank branch anymore because of Venmo and Zelle and paying all this type of stuff. That, in fact, happened, or is it just me?
Mobile payments.
Yes, exactly.
Mobile payments have certainly taken off. I mean, they've been around for longer than the pandemic, but they've accelerated thanks to that. And, you know, it's all a great thing. I mean, there's certainly different ways to pay. And as I said, I'm a big advocate of giving consumers a choice. So
all my kids know if they want anything from me cash-wise, they can't just text me and say, Dad, can you send me $100? They have to call me. We have to have a conversation.
Real phone.
And so that just
tough.
He's
Irish tough.
That is strict.
So
he's looking at me laughing every day. How has the Boston Fed changed? I walked over from the hotel to the Motel 6 down the road, and there's Kathy Minahan's hunk of marble outside the front, and of course going back to Mr. Morse and Siren of years ago. What does the new Boston Fed look like versus the stereotype we all hold across the nation?
I don't think it's changed very much. I've been here almost 30 years, actually 30 years coming.
You're more important than Susan Collins. Cut to the chase.
Well, I've been here longer than Susan Collins. I'm not more important, but I don't think it's changed very much. So I've been here. She's my third Boston Fed president, and I don't think it's changed very much. We have fantastic research department, which has grown a lot. We have I don't think our mission hasn't changed. Our objectives haven't changed. So I don't think it's changed very much.
And the Charles River has another Nobel Prize. I mean, it wasn't the right school.
I know.
But at least Darren and Simon Johnson joined us the morning of the Nobel Prize. Very exciting to see them take that.
MIT is always winning over Harvard, but
why is that? Why is that? I think our audience worldwide would like to know.
Yes, I think it's a coincidence, and you know, some people move one way or another, so it's just a matter of time. We'll catch up.
Nice competitive spirit.
I would agree with that.
Yeah.
Joanna Stavins, thank you so much. With the Boston Fed, really leadership on payments across this nation and on consumer behavior. Her research absolutely definitive. We got through that without asking her about Bitcoin.
Yeah, thank you.
That's, we'll do the...
Very lucky for me.
Joanna, thank you so much. We're here at the Boston Fed in support of Bloomberg 92.9 FM. We've gotten in the first numbers, the listening and that. Just anecdotally, last night, it was amazing out at restaurants, the people that, between YouTube video and, of course, what we've been doing up in Boston for years. But with 92.9 FM, it's certainly... a much more generous signal. I like to say from Mount Katahdin to Block Island.
That'll get you there. Okay.
Dr. Stavins is looking at me like, I don't think so. Anyways, that's where we are. We've got a pullback here right now in the markets off the election rally. If you've seen the 10-year real yields, what I look at is the thermometer. This is in 2.08% this morning. Paul Sweeney and Tom Keene in Boston here all morning. Michael McKee with Susan Collins in the 10 o'clock hour. From New York City, from Boston, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling off the post-election rally. The NASDAQ futures leading the losses right now, down about 0.7%, 163 points. Dow futures down 0.3%, 162 points. S&P futures down about 0.5% or 30 points. We have the two-year yield at 4.32%. That's down 2 basis points. The yield on the 10-year, 4.44%, and that is little changed. To currencies, the Bloomberg Dollar Spot Index down 0.3%. We have the Japanese yen stronger, euro stronger, British pound stronger, and Bitcoin up 2% at 90,272. The UK economy, that cooled more than expected last quarter. September GDP shrank 0.1%. The consensus was for 0.2% growth. Over to shares of Lenovo, raised its projection for global PC shipments in 2025 after an earnings beat, but its shares down about 1% in Hong Kong. And Samsung unveiled a surprise $7.2 billion buyback plan for the year ahead. Its shares are up 7% in South Korea. And finally, the Jake Paul-Mike Tyson fight tonight will give Netflix the opportunity to flex its live sports events muscle. Analysts are telling the Associated Press the fight could be the most watched boxing match ever. That is a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Greatly appreciated. Paul Sweeney and Tom Keene from Boston. 68th meeting of their important discussion on finance. We just had on Joanna Stavins with her leadership here on how all of us write personal checks and payments, and Sweeney's kids pay their charge cards responsibly, and the rest of it. Gautam Mukunda will join us. He's been a huge influence on Bloomberg Surveillance on the election in the 8 o'clock hour. Joining us right now, we get a huge response the last time he's on. He's with Morgan Stanley is what it says, except when you go into the frigid Boston climate, it's really Eaton Vance.
Yes,
Morgan Stanley bought Eaton Vance a number of years ago. Huge bond influence here in Boston, and, of course, with Morgan Stanley Investment Management. Andrew Cizorowski with us right now. I love your note, particularly on real yields. Everybody here on their morning commute nationwide on YouTube, they know I focus on the 10-year real yield. You're saying it's a gift, and you're saying it's a great value. This morning, do you load the boat on bonds?
Look, I think if you're a long-term investor and you're seeing this positive 2+% real yield, this is something, if you go back over the last 10, 15 years, for a long period, we're sitting at negative real yields or sub 1% real yields for the longest time. And if you're looking out kind of 6, 12 months from now, and you know that the Fed is well above where they want to be for neutral, they're going to eventually, this real yield is going to compress. I think the reason why it's as high as it is because inflation has been high, inflation's been volatile, but the Fed's kind of landing the plane, and we're getting close to their inflation target, and I think you're going to see real yields compress at the same time.
So what does the Fed do? Do they skip December? Do they wait into 2025? Are they a little skittish now that the economic data has come in stronger than expected?
Yeah, obviously the bond market sold off a little on Powell's speech yesterday. I think he was trying to push back the probability a little bit of a December rate cut. But I think when you're looking at, if you're the Fed and you're kind of, it's still early enough in the cutting cycle where you're kind of, it's like you're walking through a hallway and you turn off the lights. The first couple steps, you know where you're going. And I think that's where the Fed still is. But as you get further down that hallway, you don't know where you're going. But we're still far enough from neutral. I think they could cut in December. And again, it's all about the labor market for the Fed. as inflation's kind of getting closer.
It's all about the labor market, but the heart of the matter is claims, for example, haven't cracked. Is that the surprise of the early Trump administration, and that maybe the labor market finally cracks? When you read Ellen Zentner, Gapin, and people at Morgan Stanley, how do you interpret that?
Yeah, so if you look at claims, we're at an extremely tight labor market. But if you start to look at other factors like job openings, we're basically at 2019 levels. And I think when you look at, if we're at 2019 labor market, think about where the Fed funds rate was in 2019. We were over 200 to 300 basis points lower than we are today. And I think that's what we're talking about is the Fed's forward-looking. Rate cuts have a long and variable lag, and the Fed wants to preserve this labor market today out 12 months. They need to continue to cut to get there.
Where in the fixed income space do you find value these days? Because I can sit there at a 2-year Treasury at 4 and change coupon. Do I need to take any credit risk these days?
Yeah, I mean, I think you do want to take some credit risk here. I think if, you're mentioning kind of be able to hang out in a 2-year Treasury, or there was an article in Bloomberg just this morning or yesterday talking about $7 trillion sitting in money markets. I mean, so clearly there's a lot of people content to just hang out in money markets. But I think, again, the Fed's cut 3 times. We're now at a point where actually those money market yields have gone from mid-5s to all of a sudden kind of mid-high 4s. And I think you are going to see some of that cash come out over the next kind of 6 to 12 months. I think you do want to move out the risk spectrum. We look at it's kind of a pretty benign credit environment, so we think high yield is a great place to just earn your carry. If you want to stay high quality, agency mortgage backs has been a trade a lot of people have been talking about for a long time. I do think there's going to be positive tailwinds for the mortgage backed sector going forward. This is the other side of 7% mortgage rates is agency MBS investors can get kind of 6-handle yields now.
The heritage of Morgan Stanley is argument, and the argument I see, and this is really crystallized only in the last 3 or 4 days, is a crew that says they're going to delay, they're not going to cut rates. And people like you that are saying you're nuts, they got lots of room to move, and they're going to cut rates. Is this polarization normal, or is that almost opportunistic for investors?
Yeah, I think there's a lot of people making assumptions about what's going to come, tariffs and how that's going to impact inflation. And I think that's one of the things that Powell mentioned it yesterday in his speech is that he's not just going to assume like that tariffs are going to come, or he's not just going to assume that tax cuts are going to come. He has to kind of work with things today, and it's not clear that ultimately when tariffs do come that that's a net kind of again. The Fed was cutting in 2019 as tariffs were kind of coming through. So I think it's one of the things that you have to look at the economy and where we are today. We again, the economy's strong, but it is decelerating. The labor market is decelerating, and I think the Fed wants to preserve that here. And so we're talking about finding our way closer to neutral, and we're still in restrictive territory. And you look at the backup in yields we've had since the Fed cut in mid-September. We've backed up 80 basis points. That's tightening financial conditions at a time when the Fed's trying to loosen conditions.
So how about flows into fixed income? What are you seeing from your clients? Are people still are they chasing that yield here?
Yeah, well, fixed income's seen great flows for most of the year here. I think that this backup we've seen over the last 6 or 8 weeks or so is setting up nicely for kind of 2025 flows. I think there was a period in mid-September when yields were in the mid-3s on treasuries that people were saying, like, is the juice kind of squeezed out of this trade? And I think this backup has actually set us up nicely. That on top of the fact that, again, those money market yields on a relative basis, if they've come down 75 basis points, it's getting more attractive to kind of move out the yield curve and the risk spectrum.
Okay, you want to move out the yield curve. Are you telling people far more basic than what you're talking to get to extend out the CD and lock it in now? Is it still, we're still in that mood?
Yeah, I'm not saying go from your T-bill to a 30-year Treasury. I think that there's still a lot of questions about deficits and some of these things.
Okay, well, give us a duration, plus or minus 3 months.
No, I think you want to go out to the kind of belly of the curve, the 3 to 5 year point of the curve, and that's going to be anchored by what the Fed's going to do. That's going to be anchored by the labor market and the economy, and I think that's the most transparent place to be at this point.
Are bonds once again a hedge here for risk assets? I mean, the 60-40 portfolio that Tom and I grew up with, that kind of got blown up in 2022.
Yeah, 60-40, if you had it our way, 99-1 bonds, equities. Right. But so, yes, I think they are a hedge again. I think the reasons why bonds didn't work in 2022 was because inflation was high. We're at a period where you look at headline PCE, it's at 2.1% year over year. So if inflation was to kind of like reassert itself, that's when bonds don't act as a great hedge. hedge. But I think in an environment where inflation's in the two handle, bonds hedge yourself. If we have any sort of economic slowdown, bonds are going to rally in that environment.
I drove by into Bentley last night, the wonderful the heritage of Eaton Vance, on what I call the green here in Boston. And I was thunderstruck at the building that's gone on in the last 10 years. And yet Boston was hammered by the pandemic like everyone. Have you seen, I mean, you're working 6 days a week in the office, Andrew. Have you seen the rebound from the pandemic in downtown Boston, in financial Boston?
Yeah, we've definitely seen the rebound here. If you walk, again, it's a little early here today, but in another hour or two, you're going to see we got some of the biggest asset management firms around here. Everyone's in the office. The downtown is kind of back. So I think
it's kind of back.
It's back. Yeah, it's back. Yeah. And you go across the bridge here to the seaport, and I don't know last time you guys were here, but there's a whole new city that just popped up.
I saw Vertex Pharmaceuticals there. I remember when I think I did the IPO on Vertex years ago.
Yeah,
I mean, there's a pop to it. I think there's more downtown here vibrancy than there is in New York City.
I agree 100%. I mean, the airport was packed coming in. It took me 40 minutes to get through the tunnel. Yeah. I mean, it's just
the Ted Williams tunnel.
Yes. Yeah. I remember that being built back in the day.
And what's great here in the young, I don't know if Andrew, I think you appreciate it because you were at Durham, but the miracle here of big spending projects to sink the Southeast Expressway below the ground. Younger people have no idea the shock it was to one day look across the Rose Kennedy Garden to the north end.
Oh, yeah. The highway used to go right across from Eaton Vance. It's above ground. They put it below ground. So that whole area is now called the Greenway. It's beautiful now. Again, a lot's changed in the last 20 years.
Okay, I want to pin this down. Where's the 10-year yield 12 months out? Peck's not listening.
10-year yield 12 months out. They say never give a forecast and a date, but I think you're talking about kind of in the 350 to 375 range.
Nice.
And again, so I think there's a lot of upside in bonds from here. Once we get past some of the noise here in tariffs and some of these things.
What we've established here is bond bull Andrew Sikorski. Thank you, with Morgan Stanley Investment and of course Eaton Vance at Boston. Paul and I are in Boston here. We welcome all of you on YouTube. Subscribe to Bloomberg Podcast on YouTube. Just humbled by the growth of that here in the last months. Apple CarPlay, Android Auto. Good morning across America. With our news in New York City, John Tucker.
All right, Tom and Paul, President-elect Trump has made another controversial choice to fill his cabinet. He's named Robert F. Kennedy Jr. to lead the Department of Health and Human Services. The decision puts a prominent vaccine skeptic and critic of the pharma industry in charge of federal health policy. Let's get more from Washington and Bloomberg's Wendy Benjaminson.
He has tremendous power over all Americans' day-to-day lives. I mean, there was talk that he might get an advisory role, something like Elon Musk and Vivek Ramaswamy got, some sort of off-the-book, project to work on. Instead, he put him right at the heart of Americans' health and diet.
Bloomberg's Wendy Benjamin says Kennedy's views on vaccine and support for things like raw milk and removing fluoride from water could set him up for a tough Senate confirmation. The president-elect also gave a sneak preview of a cabinet pick he plans to announce today. Mr. Trump says he'll name North Dakota Governor Doug Burgum to be Secretary of the Interior.
We're going to do things with energy and with land, interior, that is going to be incredible. And so I look forward to doing the formal announcement.
Donald Trump's decision would give Burgum significant influence over his plans to ramp up sales of oil and gas leases, including in the Gulf of Mexico, that had been curtailed under President Biden. Mr. Trump still hasn't named a Treasury Secretary, but he's ruled out Jamie Dimon. The president ruled out Jamie Dimon. The president-elect posting on Truth Social, the J.P. Morgan Chase CEO won't be invited to his administration. Dimon does have some advice for the next president.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
Dimon spoke with Bloomberg's Lisa Abramowitz at the Apex CEO Summit in Peru. Elon Musk ramping up his feud with Sam Altman, alleging in a court filing that OpenAI is trying to corner the market for generative artificial intelligence and sacrificing safety in the race to get ahead. In a revised version of a lawsuit he filed in August, Musk highlighted antitrust concerns about AI's journey from its nonprofit roots to its current effort to restructure as a for-profit company. Global news 24 hours a day. Whenever you want it, we at Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
John Tucker, thanks so much. Paul Sweeney and Tom Keene, again in Boston in support of 92.9 FM. Good morning, Bloomberg 1130 in New York City with Lisa Mateo and John Tucker. And 99.1 FM in Washington, recovering from Nathan Hager and Amy Morse here in the early morning hours. We'll have continuing coverage for you. This wonderful conference in Boston. Susan Collins with our Michael McKee. Later in the morning, we're looking at your consumer payments in the modern world. The market's pulling back a little bit here off the election rally. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling after Chair Jay Powell signaled the Federal Reserve was in no rush to cut interest rates. Now that pushed odds on a December cut to less than 60% from roughly 80% a day earlier. Right now, NASDAQ futures down 0.7%, 161 points. Dow futures down 0.3%, 159 points. S&P futures down about 0.5% at 30 points. The two-year yield at 4.32%. That's down 2 basis points. The yield on the 10-year 4.44%. And that is little changed. The Bloomberg Dollar Spot Index right now lower, down about 0.3%. We have the Japanese yen stronger, euro stronger, British pound stronger. And after hitting a record 93,000 level early this week, Bitcoin giving up some gains right now at about 89,000. Few companies making news. That would be Meta. The company says it plans to appeal court rulings. It allows dozens of states, hundreds of school districts nationwide to sue them. They claim its social media apps contribute to a mental health crisis among kids. And another drug maker going to court over hospital drug discount payments, Eli Lilly. It sued a federal health agency, blocked the company's plan to tighten the way it provides discounts to hospitals. And finally, Elon Musk ramped up his feud with Sam Altman. It's a revised lawsuit accusing OpenAI of trying to monopolize the market for generative AI and also sacrificing safety in the process. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Greatly appreciate it. Bloomberg Surveillance in Boston and across the nation this morning, around the world, we're brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. Somebody on YouTube saying, why are you looking at your phone nonstop, Tom? It's amazing.
That's how you run the whole world with your phone.
What Bloomberg has done digitally when you're traveling, when you have a Bloomberg terminal and all that, it all links in.
Yep.
It's you know, they put it out and it was like a complete failure, to be honest. Good morning, Tom Secunda. And Mr. Secunda and his team, all of a sudden, it's this wonderful interlinking of things, and it just works. I run the whole world off the phone here. Can't say enough about Bloomberg Digital for what they've done there. Okay, we're going to start here with the science of monetary policy. You're at NYU years ago, and you're in a room with Mark Gertler. You know Richard Clarida, who's a huge supporter of what I do. Gertler-Clarida was definitive 30 years ago in framing out our modern monetary policy. He has had a research, which means the most important job here. Susan Collins will tell you that. At the Boston Fed, Egon Zechariajic joins us right now, Director of Economic Research. What was it like at NYU in the fervor of that paper, The Science of Monetary Policy?
It was great. It was very interesting. This was the first really rigorous attempt to provide sort of systematic framework about monetary policy and how to think about it, not just in U.S., but how to think about it in a global sense. It was incredibly influential, and many of the lessons we have right now.
You nail rigorous, and I've talked to Richard Clarida about this at length, I think once with Gertler, but far more with Clarida. Clarida and Gertler and Zechariajic have been hammered by 3 once-in-a-lifetime events, including the pandemic. Do we move away from the mathiness that you own here at the Boston Fed to a more Thaler-like at Chicago behavioral economics?
I think it's to be pragmatic. It was never meant to be a blind rule following. Rich Clarida, Mark Gertler, these are really great economists. And, they understand there's a systematic component. It's helpful to have a framework, but the reality is just so much more complicated. And the kind of, learning about the data, the tailored behavioral aspect are always entering into the, policy decisions.
As a director of research here at the Boston Fed, give us the latest research that you and your team are seeing about the economy here in the greater New England area. How is it?
So, the economy is doing well. It's a reflection, of the national economy, which is doing this. We're in a really good place, right?
Mm-hmm.
This is really the...
We just said before you came on, the city is hopping compared to New York City.
That's great to hear. I've heard also positive things about New York City. I was just recently there for our joint board of directors talk, and there was a lot of optimism about New York as well. New England is a particular region. It's a region that has maybe somewhat older population on average, higher education. Its industry composition reflects that. It's a bit of a knowledge economy, and it's obviously booming, from AI and all of the things that are also present in here. So it's a good time.
Because when I do think about New England and in the greater Boston area, I think of biotech, tech in general. You have, again, as you mentioned, so many great universities in this part of the world here. Talk to us about the technology story of New England these days.
Yeah, it's really remarkable. It goes quite a bit back. As you mentioned, the presence of key universities that have, create a reliable pipeline of innovative, creative young people. But I think it's also combined that there's, not just on the technical side, it's complemented by education system that really, really promotes entrepreneurship. It is considered, very much that, the technical abilities in entrepreneurship, how do you intermarry? So there's a lot of creation, job creation that is happening right now, and that sustains the economy. That attracts people. It acts as an amplifying mechanism, and it contributes to a lot of growth.
Well, from Minahan forward, maybe back to Siren even, you have been entrepreneurship-led. Every Fed, folks, has an act. St. Louis Fed, Dallas Fed, Atlanta, they all have a certain case. The San Francisco Fed, it looks west across the Pacific to Asia. You guys own entrepreneurship out of the education access here. We have a president who just revolutionized America and is talking about this word deregulation. Do we need deregulation?
That's always, a question of, in some markets, probably yes, and in some markets, probably no. It is very sensible to, at times, take hard look and continuously monitor to make sure that the economic system remains vibrant. And at times, things change. Regulation must change as well. So I always view this as a dynamic process, and addressing that, it's always a good thing.
Yeah, we had Danny Blanchflower on from Dartmouth yesterday, and we were talking about aggregation and the disaggregation into two Americas, the haves and the have-nots. You guys own the research high ground on the haves taking all the gain, and the have-nots witness this trifecta election furious. That polarization, have you ever seen that in your research at the Fed?
I have not seen that at the research at the Fed. We do try to take a very objective, data-driven approach. Facts are what they are. Our really part of a dual mandate of what we try is in support of full employment, a vibrant economy that works of all. Those are the social and economic outcomes that are of interest of everyone. So, our research is really nonpartisan. It's meant to be objective, and it's to try to highlight the kind of choices the society, has to make.
We're going to get retail sales today. How are retail sales in this part of the world, in Greater New England?
To 2 decimal points, please.
Yeah.
2 decimal points. I can do 3. No, consumer spending is maintained really well. We are seeing reports that consumers are becoming more price sensitive. That is something that is happening in New England, but I think it's also reflected in the region, and many of them are also trading down. So, the stock of excess saving has been depleted, so there's a lot more sensitivity to pricing.
Dr. Zekarevic, no one cares. What are you going to do about the Boston Red Sox? Should they get one from Juan Soto from the Yankees? What do you think?
I think I'm new to the region, and I am learning to embrace the wonderful sports culture of Boston. So Boston Red Sox, let's go.
Okay, the Fed tickets for the Celtics are jaw-dropping. He is the head of economic research for Susan Collins here at the Fed. Egon Zekarevic joins us. Thank you so much. Thank you for those comments on Clarendon Gertler as well. We just can't say enough about the hospitality. Did you just see the coffee here? It's remote coffee. Usually we have fine homebrewed coffee. This is from the Starbucks clan. They're up that early.
Well, usually in this part of the world, you go Dunkin'. I mean, that's kind of where the locals
go. You do Dunkin'. I drove by Dunkin' last night. Yep. They're a sponsor of us years ago. Good morning to Dunkin' Donuts and other donut emporium across the Fed district of Boston. We're here with markets pulling back. That's the key headline today. The 10-year real yield out to 2.08%. Just a little pullback. We've actually seen here Bitcoin go 91,000 down under 90,000 this morning. I'm in a restaurant last night. Guy comes up, how you doing? Great, great. Doesn't give a damn about me.
No.
What's Lisa Mateo like? Can you play some Dave Matthews for the guy doing Alzheimer research? Mr. Matthews.
Touch your lips just so I know in your eyes, love, it glows so I'm bare bones and crazy for you. Oh, when you come crash into me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Mr. Barr on assignment. Lisa Mateo on assignment in New York City this morning, doing better than good data checks because we're not doing them here. We look at equities, bonds, currencies, commodities, and of course what we see is a pullback off of the election rally. You've been looking at BitDog all morning, 91,000.
Sure.
We're down under 90, right? Like
We're still.
80,
This has been a
80.
rip time. We were at 60,000 before the election, so it's just been a big move in risk assets.
Welcome all of you from Boston. We are in Boston at the 68th meeting of the Fed, and it's a really important meeting. For those of you on YouTube, the future of finance, they have gathered from around the nation, including Haas Berkeley, important discussions about what you and I are doing as we try to get away from paper checks and cash and get over. You mentioned buy now, pay later.
Sure. It's like the layaway plans that we grew up with.
It's like our great-grandparents and grandparents did it. We were going back to the 1930s, you know, buy now, pay later versus charge cards. But that's the heat here of the smartest economists in the nation gathered in Boston for this meeting. We're going to talk to two of them here in a moment. We welcome all of you across the nation, Apple CarPlay, Android Auto, Sirius 123. Somebody said to me, I listen on Sirius in Boston. I said, stop it. 92.9 FM in Boston. We're here in support of this new project of Bloomberg, and thank you from, I love saying this, from Mount Katahdin, Block Island.
Boom.
Or something like that as well. 92.9 FM and 99.1 FM in Washington, and of course our flagship Bloomberg 1130 AM in Awakening, New York City. And on YouTube, thank you so much for the interest here. It's the new digital Tom Keene and Paul Sweeney. It is an interesting day, to say the least. Bloomberg Surveillance this morning, always brought to you by Cohn Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And we thank Cohn Resnick. In New York City, the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. We've got futures falling. Traders are waiting for more economic data. Economists, they're looking for steady growth. Today's U.S. retail sales report. Amazon Prime Day likely provided a lift to online sales. We'll reach out to you in about a half hour from now. Also on today's agenda, October industrial production, the since resolved Boeing strike, that could weigh on the data. We have NASDAQ futures down 0.7%, 152 points. Dow futures down 0.3%, 137 points. S&P futures down 0.4%, 27 points. The 2-year yield, 4.31%. That's down 3 basis points. The yield on the 10-year, 4.43%, and that is little change. To currencies, the dollar broke its 5-day winning streak. Checking in with the Bloomberg Dollar Spot Index, down about 0.4%. We have Japanese yen stronger, euro, British pound stronger. Bitcoin edging higher again, but still holding off that recent high of 93,000. It's now at around 89,000. And shares of Domino Pizza, they're up about 5% after Warren Buffett's Berkshire Hathaway took a stake in the restaurant chain. Now, it also disclosed a new position in Pool Corp. So Pool's shares up 6%. Meanwhile, Berkshire slashed its stake in Ulta Beauty. Those shares down 5%. It also cut holdings of Capital One and Charter Communications. And finally, shares of Applied Materials down 7%. The largest U.S. maker of chip-making equipment, well, it gave a disappointing revenue forecast. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. The heart and soul of Fed research are really tight, narrow papers about whatever the topic is at hand. And here it is after 3 once-in-a-lifetime events, a crisis and all, the Red Sox fading, the pandemic as well. 2 research beasts, Mattia Landoni and Christina Wang, have really put together what all this new world of finance payments means for small business. And I'm sorry, it's not a pretty paper. There's some real tension here. Christina, let me start with you. And just simply, is all this modern technology a plus or minus for small business? What is the summation?
In economics, usually we're two-handed economists. So I assume you did not expect a simple yes or no answer.
Oh, no. We're at the Boston Fed. Heaven forbid. No. But what is the answer for small business? I mean, they're overwhelmed. They're clearly falling behind within, the monopsony of America, bigger business, mid-sized, large cap. And that, can small business survive the speed of our new financial payment system?
I would say yes. Well, so first of all, let me start by saying, everything you've heard this a million times, but I'm afraid I have to repeat. Everything I say here represent my views only and nobody else's, especially not the Federal Reserve system or the Boston Fed. So I would say yes. A lot of this is going beyond our paper. A lot of the technological progress would be good for small businesses.
So, Mattia, when you think about banks, small banks, there's concern out there about some of the smaller banks. If I want to start a business, if I want to build a commercial property, are the small banks still there for me?
I need to add the same disclaimer.
No, don't worry about the disclaimer. We got the disclaimer.
I already did the disclaimer. Anything I say this morning at the Boston Fed has nothing to do with Bloomberg LP or Boston Fed. Okay, we've disclaimed.
Thank you. So the small banks will have to do their own calculus, but a lot of what small banks do is real estate lending, and I don't think that is going
but how about
the
private? A lot of folks are saying, boy, maybe the smaller banks aren't there for the smaller businesses, and that's given rise to the private credit business. So how do you guys think about that?
I think, so far what we've seen in terms of where the private credit companies are investing, I don't think they're getting to the really small business that what you and I think about the mom and pop shops yet, at least. And so I think local community banks can certainly still play a role in serving those small businesses.
Our listeners nationwide, out to California, good morning out on the West Coast, early morning, were riveted by what appeared to be a run on the bank in Wellesley Hills, Massachusetts, when the regionals blew up 18 months ago or whatever, and people were like, where's my money? And we got through that. The Fed did some courageous action and move on. Have we moved on from regional bank tension, given all the modern innovation that's out there?
Given the current high degree of uncertainty, I would say that is not, the banking system overall is pretty strong, but depending on where interest rates go, that danger may not be entirely sort of behind us.
Well, we thank you for stopping by this morning. It's been wonderful. Congratulations on your paper. And I got 18 more questions. Matthias was at the IMF years ago. We could talk about that for 3 hours. But more, Christina Wang, Mattia Landoni, thank you so much for joining us this morning. Greatly appreciate it. Lots going on here at the Boston Fed, and some of it is going to be wrapped around Susan Collins. Very important Fed interview, and made more important after what we saw from Chairman Powell yesterday. I believe it was in Texas, with Catherine Rampell of the Washington Post. I adore her work. She's really, really quite good. And she was a piñata out on social yesterday. Some people saying she was the greatest thing since sliced bread. Why isn't Rampell in at the Fed meeting asking Powell, Catherine Rampell, questions? And other people saying she was totally out of line. And, that's what you get when you get somebody as good as Catherine or Michael McKee asking questions. We're going to see that later this morning.
We're going to see that later this morning, Tom. Michael McKee's going to be sitting down with Boston Fed President Susan Collins here, so that'll be interesting. Right at 10:30 Wall Street time, Tom.
Yeah, we're gonna have to see on that. We welcome all of you again. I can't say enough how, we're in our hermetically sealed studios. Paul gets a Sikorsky back to the beach house, and I get in a Bentley and I wander up 3rd Avenue. We're completely sealed in the New York City bubble. And to come up to Boston and see so many people on the plane and here last night talking about the show, what we're doing with 92.9 FM, but particularly with YouTube.
Yep.
I don't go home and watch us on YouTube. I'm sorry. That's not what I do, and it's working.
It's working. That whole internet thing, I think it's the thing.
You and I really don't understand this. No. We got the studs like Escobar and Eric. They understand YouTube, but it's working, and we say thank you to you. Please subscribe to Bloomberg Podcasts. Right now, with our news in New York City, he's never turned on YouTube. John Tucker.
All right, Tom and Paul. President-elect Trump making waves as he fills his cabinet. He's named Robert F. Kennedy Jr., a campaign rival turned Trump supporter, as the Secretary of Health and Human Services. And Bloomberg's Wendy Benjamin says Kennedy's views on public health are a little unorthodox.
He has advocated to remove fluoride from our drinking water, which has been in our drinking water for 80 years. He has talked about making vaccines optional, which would make public schools a possibly germ, disease place.
Bloomberg's Wendy Benjamin says those positions on public health could set Kennedy up for a tough Senate confirmation. Senate Democrats plan to use their last weeks in the majority to try to make public a House sexual misconduct probe into Matt Gaetz. That's President-elect Donald Trump's controversial pick for Attorney General. More on that story from Bloomberg's Scott Carr.
Chair of the Senate Judiciary Committee, Dick Durbin, issued a statement calling on the House Ethics Committee to preserve and share the report on Gaetz, who's been the subject of an ongoing House investigation into allegations of sexual misconduct, illicit drug use, and misuse of campaign funds. Republican representative from Kentucky, Andy Barr, tells Bloomberg he thinks the committee needs to release it.
Yeah, I think the Senate will demand that. I think the Senate will need that information in order to work its will in the advise and consent process.
So far, Director of the House Ethics Panel, Tom Rust, has declined to comment. In Washington, I'm Scott Carr, Bloomberg Radio.
Meantime, the incoming Senate Majority Leader John Thune tells Fox all options are on the table to clear President-elect Donald Trump's nominees, including allowing them to take their jobs without Senate confirmation. North Korea tested exploding drones designed to crash into targets, and leader Kim Jong-un called for accelerating mass production of the weapons. The country's latest military demonstration came as the U.S., South Korea, and Japan engaged in combined military exercises involving advanced fighter jets and a U.S. aircraft carrier in nearby international waters. An emergency contraception brand, Julie, says it saw Amazon orders of its pill pretty much explode, as they put it, last week. At some retail locations, by far where most people buy emergency contraception, sales doubled week over week. Winx Health says in the 24 hours following the election, it sold 7 times the number of morning after pills that it had in the prior week. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, Lisa.
John Tucker, thank you so much. I can't go to Lisa right now the way our wires are set up, but I'm going to go to Paul Sweeney here. The Christmas season is upon us, and The Rock has a movie out.
Oh, boy.
I don't have the name in front of me, but The Rock will be out in the movie. Mateo first in line to
Big
see
Red,
see The Rock. What I want to know, Paul, is remember Thanksgiving.
Yep.
And then it was Christmas.
Yep.
That's all gone, right?
It's still there. It's still there. I mean, the box office is still there. It's just not. I think it's a limited number of types of movies that are going to really, really work at the box office.
Did you see what Deadpool Wolverine is? It's like a 1.3 billion statistic.
I'm telling you, the big numbers are still out there, and it's slowly coming back. But it's just going to be fewer, probably, the types of releases. But still, box offices there. People going to the theaters.
We're in Boston. Thank you for joining us across the nation. Lots going on. We'll continue. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Traders, well, they're trimming their expectations for a December Fed rate cut after Fed Chair Powell said there's no need to hurry rate cuts with the economy strong. Right now we have NASDAQ futures down 0.8%, 169 points. Dow futures down 0.3%, 164 points. S&P futures down 0.5%, about 30 points. The 2-year yield at 4.29%, that's down 4 basis points. The yield on the 10-year 4.42%, and that's down 1 basis point. To currencies, the Bloomberg Dollar Spot Index down 0.2%. We have the Japanese yen stronger, euro, British pound stronger, and we have Bitcoin up nearly 2% at around 89,000. To commodities, Brent crude $72 a barrel, WTI crude $68 a barrel, both lower. Spot gold up 0.3%, $2,574 an ounce. Shares of vaccine makers, including Pfizer, Moderna, BioNTech, trading lower. This is after President-elect Donald Trump picked vaccine skeptic Robert F. Kennedy Jr. for health secretary. Pfizer down 0.5%, Moderna down more than 1%, and BioNTech ADRs down nearly 2%. And shares of Palantir up more than 2%. The company said its New York Stock Exchange listing will end at market close on November 25th, and NASDAQ trading starting the next day. And shares of Alibaba on the rise, ADRs up more than 1%. It reported second quarter adjusted EBITDA, adjusted net income that came in ahead of estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Greatly appreciate that. Did you see how she just rattles that off?
She
EBITDA?
knows what's going on.
When she was at PX years ago, I mean, she wasn't talking EBITDA.
She wasn't talking EBITDA. Income statements, balance sheets.
Lisa Mateo with a killer world-class data check there on the edge of Karen Moscow. That's how we put that. We are in Boston. We're in support of 92.9 FM Boston, humbled by the initial response of that large signal from Mount Katahdin down the block. Island, good morning across the nation on your commute on YouTube. Again, subscribe to Bloomberg Podcasts. In Illinois, particularly subscribe to Bloomberg Podcasts. This is a joy because he is the giant of payment. I want to go, Charles Kahn with us here of the University of Illinois. He's emeritus in some persuasion, but working 60 hours a week as it is. We are honored to have you here.
Thank you.
You know, out of the Harvard PhD with Olivier Blanchard, you've worked at finance. You've worked at payments, arguably like no one else in the nation. Ken Rogoff was my book of the year X number of years ago, The Curse of Cash. And the basic idea is, are we going to get rid of cash? Let's get an update on that. Are we becoming a cashless society?
We're becoming a cashless society, but very, very slowly. And important reasons for that, because cash is actually important for things that it does better than other things do.
I mean, what's important, Ken told me not once, twice, 3 times. He had death threats over this, Paul. I mean, this book was heated. And Ken told me that we should not do away with small bills, 1, 5, 20, even up to 50, maybe up to 100. Is that where you are? Is it we got to keep cash within the system?
Actually, that's not quite so important because credit cards are becoming better and better and better at smaller and smaller and smaller amounts. So that's not the important part of the thing. In fact, the important part of the thing, I think, is privacy. That is that you can't trace this as well as you can trace other stuff.
Yeah.
There's just
It's
nothing.
the criminal activity, right?
Not just criminal activity. There's also places where I just don't want to be bothered. I don't want to have a bunch of spam come after me because I bought something, and I'd rather not bother with that. I'd rather have this transaction between you and me be final, and we don't have to meet each other afterwards. And that's very hard to do without a
Can you get rid of the things on Paul's and my cell phone where we do a transaction, Paul, and they want to know how you feel 3 years later? Are you the guy that can get that done for our listeners nationwide?
No, but my daughter's in IT. I can ask her to help with that.
Exactly. Professor, on the walls here, literally here at the Federal Reserve here in Boston, they have framed something about Fed Now.
Yes. It's not the most beautiful
That's not
picture.
fine artwork. What
No.
is Fed Now?
Fed Now is a new it's a new project by the Fed, and it allows for instant payments where you can move money from one bank account to another in that amount
Is
of
that
time.
Zelle or
Zelle is one of the things that has latched on to instant payments because back in the old days, Zelle didn't show up itself until these instant payments came around in private versions, and the Fed Now is the public version of the same thing.
So is it easier, cheaper? It feels more efficient to move money around. I mean, the kids can ping me and say, Dad, I need $100. And that's boom, it's there.
It's there. Yeah, it's a big deal, and it's even a bigger deal in Europe, where people have just been assuming this for a long time.
And now, folks, a surveillance technical adjustment. Professor, could you pull the microphone a little bit away from your handsome Wolf Blitzer beard? Okay, because his beard is scratching across the mic. Lisa's going nuts in New York over that. How about privacy? All of us, like, we're out on the road. Ignatz needs $242, and I'm doing Zelle or whatever to get it to them. Is there somebody spying on me?
No one is spying on you because no one cares about your $242. But the only people who could be spying on you, be interested in the $242, are whoever is going to try to sell you something on afterwards on the basis of it. Now, if it were a bigger payment, there'd be people out there spying on you for sure.
I feel like just with the more and more digitalization of money, criminal activity, if I were a criminal, I would think, boy, there's a lot of stuff out there for me. If I just would do my computer science class, I could really get involved here.
Absolutely. And in fact, one of the things that's caused there to be not as fast a take-up by banks of FedNow as you might have hoped is this fear of they don't have the resources yet for handling, checking on fraud in an instantaneous fashion. That's really tricky.
What does Jamie Dimon want from you?
I have no idea.
You're the number one thinker on this. He and other big banks own the high ground. They're getting bigger every day. They want to hide how big they're getting every day. And he's over-investing in digital banking, finance, technology. Where does he want this to be in 5 years?
That's an odd question. I don't even know.
It's Friday. That's the way we roll on a Friday.
I see.
But where is your world heading? You've thought about this longer than anybody else.
Okay, so what's really interesting here is that I think FedNow is actually an antidote to that, because that's going to be particularly interesting to smaller banks. The existing system, the one that runs through the clearinghouse, does much of the same thing that FedNow does, but it's run for the benefit of the larger banks, and it meets their needs more than it meets the needs of the smaller banks. So I think one of the important reasons, I'm not a Fed employee, so I can say this, I think one of the important reasons that FedNow came in was to be a counterbalance to the big banks' fast payment system.
Well, how about the smaller banks, the regional banks? Can they keep up with all this technology?
Regional banks can. What's really worrying about is community banks.
Okay.
I mean, for them, it's really hard. They're going to need to find the Jack Henrys of the world to bring the technology down for them.
I have to ask, Bitcoin? Help me here. You're in class. You got a piece of chalk in your hand. 6 of the kids are multimillionaires because they bought it, where Matt Miller bought it. Quickly here, Professor. Bitcoin, is there an underlying that you or the Bank of International Settlements sees?
No. They're the beanie babies of the 21st century.
Beanie babies of the 21st century. Boy, that sounds like a Jamie Dimon type.
Rich, can you
analysis.
frame that for the commercial we're going to do off of this? Bitcoin is the beanie babies of the 21st century.
Yes.
How's it going to end?
Badly.
All right.
Okay.
There you go.
A little controversy there. We look for your emails and hate mail. Send the hate mail to me. Send the love notes to Professor Charles Kahn. He's a professor of beanie babies at the University of Illinois. Professor, we are honored to have you here with your decades of work of thinking about how we get away from paper checks and cash cashiers. This is a big difference, folks. I never have cash on me, and you walk around like Fort Knox here with,
you never know we're going to walk past a craps game. That's how I feel about it.
It's a behavioral thing, and you're really comfortable having cash.
Yeah. I mean, again, it's a Jersey Shore thing. You walk into a bar, you put a crisp 50 down on the bar, announces your presence with authority. That's how it works. I'm not going to put like a
That sounds like
Apple
a Bon
Pay.
Jovi song. I don't know. They don't know who Bon Jovi is in Boston. Paul Sweeney and Tom Keene were at the Boston Fed, the 68th meeting. Coming up later, Susan Collins in conversation with our Michael McKee, made more important by the conversation of Jerome Powell yesterday with Catherine Rampell. I believe that was in Texas as well. Markets pull back a little bit. Lisa Mateo with those huge data checks today. We say good morning on YouTube across the nation in 92.9 FM Boston. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And economic indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn more about our consultative support and technology. And speaking of economic indicators, we have some data coming in. We're waiting just moments away from retail sales figures for October. Let's get right to it as it comes in. Now, this is for the survey. The survey was for an increase of 0.3%, coming in a tick higher, up 0.4%. That's in line with the prior. Now we get to taking autos out of the picture. For October, the survey was for up 0.3%, but it went down down to 0.1%. So instead of that 0.3%, it is 0.1%. And the prior, 0.5%. So you see the difference there. I know Tom likes the control group, so we'll go there for October. The survey was for 0.3% increase. It went down 0.1%. The reaction on Wall Street, let's get right to it right now. NASDAQ futures down 0.8%, 174 points. Dow futures down 0.3%, 129 points. S&P futures down 0.5% or 30 points. We have the 2-year yield at 4.30%. That's down 3 basis points. The yield on the 10-year 4.42%, and that is little changed. We head over to currencies. The Bloomberg Dollar Spot Index is down about 0.4%. We have the Japanese yen, euro, British pound stronger, and we have Bitcoin up about more than 1.5%. At around 89,000. We have Brent crude $72 a barrel, WTI crude $68 a barrel, spot gold at $2,567 an ounce. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Paul Sweeney and Tom Keene in Boston in support of 92.9 FM, and of course on your commute across the nation. Don't forget, at the office, at home, YouTube, subscribe to Bloomberg Podcasts as we slip into the end of the year, humbled by the new digital technology. First, Paul, rule of thumb, when at an economic conference, you really don't want the first panel of the day.
Is that right?
It's the wake-up panel.
All right.
And you hope there's lots of coffee.
Okay.
Susan Collins making opening remarks. She'll be with Michael McKee here later in the morning. Dr. Zazarek was with us here as well, head of economic research. In pulling the short straw with the first panel of the day here, and it's really important. Emily Williams out of Dartmouth and Harvard with her work here on modern digital payments and what it means for low-income people. Emily, thank you so much for joining us today. So much of this is what we don't talk about. We love to talk about slick, shiny financial innovation, and it's going to be good and payments around. There's a huge body of America that's not participating in modern financial and payments. And as we saw in election, there's an anger out there and fury tied into policy and where we are in this modern technological America. What do we need to do to have low-income people participate in Zelle is one example.
Right. So I think, first of all, we want to think about sort of what do we even mean by financial inclusion? And how do we define it? And then how does fintech or financial technology impact financial inclusion? But we need to start thinking about how do we define this? We often hear terms such as fintech democratizes access to financial products and financial systems, but it's very hand wavy, and it's not.
I love this hand. Did you invent that phrase? Is that from Slaughter Up at Tuck that we all get hand wavy?
No. But yeah, it's challenging. We have to figure out what do we mean by financial inclusion, and can we measure it? And then we can start to understand how fintech is actually impacting financial inclusion. And so sort of really trying to quantify these things, I think, is important.
So what are we seeing? How about, let's just put it into context. Over the last 10, 20, 30, 40 years, has financial inclusion improved in this country? Is there data to support that?
Right. So it depends how you want to define financial inclusion. So if you Google it, what is financial inclusion? You're going to come up with something such as, it is ensuring that all individuals and businesses have access to affordable and useful financial products. And historically, we've measured that by bank account access. And the assumption there is that bank account access is sort of a gateway to other financial products that are useful in an affordable way. And so that's been sort of an easy metric and something that we've tracked over time. And we still have millions of households in the United States who do not use a bank account.
Do banks want poor people?
Well, that's a great question. And so, one of the reasons why people commonly cite, that households don't have access to bank accounts is that it's just, banks have these huge overhead costs, really high fixed operating costs, and it's just unprofitable for them to provide account access to low margin accounts, and lower income people tend to be low margin. And so it's just impossible to provide a sort of low cost account to a low income consumer or household. And fintech is sort of really trying to spin that on its head and come in at a different angle.
Well, I would think with Venmo, with Zelle, putting more and more of those banking services on your phone, I would think that would be very attractive to perhaps lower income people, maybe new immigrants. Maybe they have a distrust of big financial institutions, depending upon where they come from in the world. I experienced that before back in my career. Is that happening?
Absolutely, yeah. So this is it. So it's, these new fintech sort of applications that have come through. It's, it makes us question, is bank account access really the way that we want to measure financial inclusion?
Then what is the way to measure it? Just as a basic question, what percentage of America doesn't have access off let's assume everybody has a cell phone. Start with that.
Right.
What percentage of America does not have financial access off that cell phone? How big a deal is this?
That's a great way to put it. That's a great way to measure it. So we'd actually, I don't know that metric, but if we think about how many people in the United States don't have smartphone access, we're talking tens of millions of people.
Tens of millions, because this is stuff, folks, this is really important, because, at Bloomberg Surveillance, we're dealing with a la-di-da audience, and we say good morning to all of you. We treasure it. But there are, Professor, tens of millions of people. They don't pick up the phone, and Ignatz needs $248, boom, 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 or Zelle or whatever, right?
Absolutely, yeah. So tens of millions of people that don't have smartphone access, tens of millions of households that have very, very poor to no internet connectivity. And of course, as banks are, much more in this sort of digital first sort of era, this is obviously a problem for, not just banks, but also other, fintech companies like Venmo. It's a challenge. And so, measuring smartphone or internet access is one way of kind of quantifying and getting a handle on how many people are not going to have access. But another way is also thinking about, well, how much are people actually spending on accessing financial services? So you think about it, a lower income person, say they receive a physical paycheck, they might take that paycheck and go and cash it at a check cashier's. And they're going to get some physical cash. They might then go to a convenience store, load it on a prepaid debit card, some of it. Then they're going to, take that prepaid debit card and pay some bills. Either they're going to do it in person or over the phone. And then the remaining cash, maybe they'll put that under their mattress, for the future. And contrast that with someone else who receives their, paycheck via direct deposit. They pay their bills via auto pay. They have access to, nice long and short-term savings. The cost of accessing those services for each one of those people is going to be vastly different. And so how about we measure the actual cost of accessing useful sort of financial services?
It sounds like one of the gating issues here is technology. And you hear from the Federal Communications Commissions and other folks that think about telecommunications policy that we need to get broadband farther out because we just think it's everywhere.
Right.
And it's ubiquitous. But if you go in the middle of some of these small rural communities, you don't have broadband.
Yes.
So is that a gating issue for this whole process?
Absolutely, yes. Connectivity is a huge problem, and there's some fintechs that are making some really interesting strides in this space. For example, there's a company called SurgePays, which is a telecoms fintech company, and what they've done is they've partnered with 8,000 plus sort of convenience stores around the country, and they provide access. They empower the clerks within the store to be able to provide sort of mobile broadband technology as well as sort of basic financial services, and it's a way of reaching those communities.
I got 14 more questions, but I don't have time. Thank you so much.
Thank you
have
very
to get to your first panel. It's economics, folks. A crack at 9:20 a.m. The show starts. Emily Williams, thank you so much from Harvard Business School as well here. And part of it that we just take for granted. We don't talk about this enough, and it's good to hear from Professor Williams on that. Bloomberg Surveillance, we're brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast. Get started today with our news in New York City. John Tucker.
All right, thanks, Tom and Paul. President-elect Donald Trump has made another controversial choice to fill his cabinet. He's named Robert F. Kennedy Jr. to lead the Department of Health and Human Services. Mr. Trump making it official at a Mar-a-Lago gala last night.
We want you to come up with things and ideas and what you've been talking about for a long time, and I think you're going to do some unbelievable thing. Nobody's going to be able to do it like you.
President-elect Trump's decision puts a prominent vaccine skeptic and critic of the pharmaceutical industry in charge of federal health policy. Kennedy's views on vaccines and support for things like raw milk and removing fluoride from the water could set him up for a tough Senate confirmation. Donald Trump still hasn't announced his pick to be the next Treasury Secretary, but one name that's not on his list is Jamie Dimon. The president-elect ruling out the J.P. Morgan Chase CEO in a Truth Social post saying he respects Dimon greatly, but he won't be invited into the Trump administration. Well, Dimon, for his part, says he's okay with that.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
Well, Jamie Dimon speaking with Bloomberg's Lisa Abramowitz at the APEC CEO Summit in Peru. The incoming Senate Majority Leader John Thune says all options are on the table to clear President-elect Donald Trump's nominees, including allowing them to take their jobs without Senate confirmation. Thune, a South Dakota Republican, said during a Fox News interview, hopefully it doesn't get to that. Trump's nominations of Matt Gaetz for Attorney General and Robert Kennedy for Secretary of the Department of Health and Human Services have drawn criticism from Republicans as well as Democrats. And Elon Musk ramping up his feud with Sam Altman, alleging in a court filing that OpenAI is trying to corner the market for generative AI and sacrificing safety in the race to get ahead. In a revised version of a lawsuit that he filed in August, Musk highlighted antitrust concerns about OpenAI's journey from its nonprofit roots in 2015, when he and Altman actually worked together as the founders, to its current effort to restructure as a for-profit company. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
John Tucker, thanks so much. Joining us now, Michael McKee in conversation with Susan Collins today. Are you going to be as tough on your questions as Catherine Rampell was with Jerome Powell yesterday? Are you going to be tough today with Susan Collins?
Oh, it's the only way to be. She knows, as she said, it's media season, and media get to hunt. We get licenses to go after Fed people.
You and I would have been at the Fleet Center last night for Boston Bruins, but they were in Dallas playing.
Yeah, and good thing we were not there.
Bergeron and Marchand are gone. It's not the same, is it?
It's not the same. Let's call it a slow start and hope that we're going to see it pick up. They are here tomorrow. They're back home in Boston.
I can't imagine where the tickets are. Michael McKee, thank you so much. Nationwide, your Boston Bruins report with Michael McKee. He'll be with Susan Collins here later in this morning. We just were greeted by the president of the Boston Fed at their important conference here on innovation. It's our new innovation, our new technology, Bloomberg Surveillance nationwide and on YouTube. Please stay with us. An eventful day for the markets. Retail sales just out.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got right on the screen after more economic data comes out. It was a look into the retail market heading into the holiday season. U.S. retail sales, they came in stronger than expected in October thanks to a boost from autos. And right now we have NASDAQ futures down 0.9%, 194 points. Dow futures down 0.3%, 156 points. S&P futures down 0.5% or 32 points. The two-year yield, 4.33%, down 1 basis point. The yield on the 10-year, 4.44%. And that is little changed. To currencies, the Bloomberg Dollar Spot Index down 0.3%. We have the Japanese yen stronger, euro stronger, British pound now weaker, and Bitcoin up about 2% at around 90,000. Few companies making news. That's Meta. The company says it plans to appeal court rulings that allows dozens of states, hundreds of school districts nationwide to sue them, claiming that its social media apps, well, they contribute to a mental health crisis among kids. And sources say representatives from Amazon, well, they were questioned by Congress earlier this fall after its growing relationship with Chinese-owned video sharing app TikTok. And finally, valuations at two of Elon Musk's companies getting a nice lift. Sources tell the Financial Times SpaceX preparing to launch a tender offer in December. It'll sell existing shares in the business, valuing it at more than $250 billion. And then on top of that, his startup XAI, it's raised $5 billion at a valuation of $45 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Paul Sweeney and Tom Keene on YouTube across the nation and worldwide. Good evening in the Pacific Rim. Of course, on your commute across America, and particularly we're in support of 92.9 FM. Humbled by that response again from Katahdin down to Block Island. Everybody in the building, we're at the Boston Fed. They have 3 degrees. So we had to go out and get somebody with 4 degrees. Joining us now, Gautam Mukunda of Yale University with other parchment along the Charles River as well. He's given us such good help here with the election. I want to talk, and this is a fancy technology seminar. Everybody here knows how to use a cell phone, a computer. They're using Fortran here at the Boston Fed.
Okay.
Yeah,
that's how they
Gautam,
call it.
as simple as this, is it Luddite America, where there's a huge, in our polarization, there's a huge body of people that just aren't taking advantage of technology and are almost anti-technology?
I mean, I think certainly there's a huge anti-technology push, but it's striking that some of the most elite pro-tech people in the world
That's my second question.
Are on both sides of this. Yeah.
I got Elon Musk as part of the new administration. He defines entrepreneurship and technology, and I got partially a Luddite America.
Yeah, so you have sort of this icon of entrepreneurship technology, Elon Musk, and you also have RFK Jr., possibly the most anti-science person in America. And apparently they're going to be serving in the same administration. So it's quite a contrast. And technology shocks, like China shocks, have had big impacts on the labor market. We know that. They seem to be affecting people in lots of different ways. We've seen the decrease in manufacturing, employment, lots of things. And all of these things added up to create a level of social ferment in this country that we're just starting to see the implications of. But the flip side of that is a lot of parties that have won big elections, and this was a decisive victory by the Republicans, but not a landslide. Right. It didn't look anything like 2008, for example, have interpreted that as gigantic sweeping mandates for all of their policies and found out that actually people were voting on one issue, and in this case, almost certainly inflation. And they've then sort of overinterpreted their victory. How much of this anti-technology thing that you're talking about is a product of people starting to overinterpret the victory? And we don't know yet, but it's pretty striking when we see this.
And Paul, you see this with the technology reports we see, like Apple or Microsoft or NVIDIA. It's like two planets.
It is. It's just extraordinary. Gautam, I mean, these cabinet picks are coming fast and furious from President-elect Trump and his campaign. What's your takeaway so far?
So, in the 1st century A.D., the mad Roman Emperor Caligula decided to make his horse Incitatus a consul of Rome. That horse was still a better pick than Matt Gaetz for Attorney General. You sort of see Republicans, Democrats we expect recoil, but you can see Republicans recoiling. That, in general, one does not expect that the Attorney General's closest contact with the Justice Department before they get the job is being investigated by the Justice Department for sex trafficking. Like, that seems out of the ordinary.
So talk to us the role that Congress will play in the confirmation process for some of these appointees?
As large as they choose it to be. I think of the set of appointees, they're the sort of the normal appointees, Burgum, Marco Rubio, who are going to get. Most Democrats will vote. Just say, thank God we got him in. Fine. Stefanik at the UN will probably get something similar like that. But the flip side is clearly Democrats are going to go insane over the idea of the sort of Hegseth, Tulsi Gabbard at DNI. That's the one that people in the internet, and I'll say in the national security community, people are simply going into they don't even know how to process that prospect. RFK Jr. at HHS. I think people don't quite realize, HHS has a budget of almost $2 trillion. So the scale of what we're talking about putting him there is just unimaginable. And this is someone who, when he was running for president, proposed that one of the things he wanted to do was just stop all research and development on new drugs. So, 4 years, no R&D in the life sciences, I think people could probably object to that.
So what's the realistic view in Washington just about to what extent will some of these Republican senators in effect go against their president by blocking some of these appointees?
I think people are starting to think not that much. It wouldn't shock me if Gates doesn't get confirmed, just because he's made so many enemies in the Congress that there'll be a reaction. But the others, I think the betting is that the level of patronage that Trump has and the level of sway he has over the party, he ran ahead of all of these people, right? He got more votes than most of these people. In Michigan, the Democrats held the Senate seat because tens of thousands of people came in, voted for Donald Trump, and left the rest of the ballot blank.
Yep. Maybe, if you're a Trump supporter, I think a lot of those folks felt like he's doing exactly what we wanted him to do, which is to be unconventional, kind of drain the swamp, to use a term from the past cycle. Maybe there is public support for this.
So I think there is certainly a base of Trump supporters for whom this is exactly what they wanted, and this is sort of, they're extremely enthusiastic about that. But my strong suspicion is that base is not 50% of the country, and it's not anything close to 50% of the country. And there are a lot of people who probably did not vote to find out that, we're not going to be inventing new vaccines for the next few years. And just note, it's not just a 4-year problem, right? When you eliminate these capabilities, you can't wave a magic wand and bring them back. Right. It takes generations to build the sort of scientific establishment that we have, and that is now at risk.
This is going to be in your lectures at Yale. It is Tom Nichols of Naval War College, all of his work. 3 times in the last 2 days, people have sent me Death of Expertise. Tom Nichols' book, I interviewed him for it years ago. The Death of Expertise. Is it as grim now as it's ever been?
Tom's great, and I would say it might be grimmer than I think that even he expected. When going into the election, you would talk to Democrats and Republicans, and Democrats, even the ones who were really scared, would talk about these sorts of appointments, and you'd say, like, what are the odds you'd get the worst case scenario? Yeah. And Republicans would say, well, we'll just have a normal Republican administration with a guy who sends mean tweets. So when you think about the spectrum of where people thought they were going to end up, these appointments are sort of the worst fears of Democrats, except not even that, nobody saw it in Matt Gaetz coming. There's a profound death of expertise problem, but let's back out from that. I think we all as a society just haven't thought through. Let's back up for a second. A lot of this is about new communication technologies. We talk about social media, things like that, which make the world more transparent. So we see that the experts were never as great as we thought they were, and they're failures. That doesn't mean they're useless. There can be mistakes. When the printing press was invented, right? The big consequence of that historians go back is they say the 30 Years' War, the worst war in European history that killed 1/3 of the population of Germany, was directly driven by the invention of the printing press.
We're going to continue this discussion in New York, as I'm sure we will, with Gautam Mukunda. He's with Yale University here. So much to talk about here on this and about the election for. Don't forget Balance of Power. Are they exhausted this week or less exhausted than last week?
They're just powering on.
Group effort.
Right through. Yep.
Kaylee Lyons and Joe Matthew. Look for Balance of Power here at 12 noon today. Look for Susan Collins with Michael McKee at the Boston Fed. We'll do that here in about an hour and a half. We welcome all of you on 92.9 FM. Saw someone at dinner last night. He said, I don't really care what you do. Just play Dave Matthews. I said, okay, we can do that. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. Mr. Barr on assignment. Lisa Mateo holding court with better than good data checks this morning in New York. Markets finally pulling back off the election rally we've seen. A little bit. Bitcoin, Paul, 91,000 down under 90,000 briefly. And, I guess that's what everybody's talking about, right?
It's a risk-on asset, Tom, and that's how people view it as opposed to a store of value. So let's bid it, I guess was the call.
We're in Boston here, the 68th meeting at the Boston Fed of a lot of really, really smart people. The center tendency is to talk about transactions, innovation, the new finance, how many times a day you're zelling your offspring money. Not that we know anything about that. In this hour and forward, we turn to the markets. Jurrien Timmer in moments. Breeze Karan of Wellington will be with us. Simona Makata of State Street. We finished strong. Matt Mishkin with us on page 2 with John Hopkins as well. And then Michael McKee with Susan Collins as well. Bloomberg Surveillance this morning on YouTube across this nation and in New York, brought to you by BNY. BNY's expertise and their insights can help clients achieve their ambitions. Visit BNY.com. And we thank BNY for their support, particularly, Jeff, you and the team over strategy and what's going on there. On the commute this morning, it's very important on radio, on Apple CarPlay and Android Auto, to talk to the number one chart guy in the world. It really works on radio. Maybe it works better on YouTube, but we're going to be chart-free this morning with Jurrien Timmer. The title is Director Global Macro at Fidelity Management. And you can see the miracle of this work on LinkedIn, where he's very, very visible. Jurrien Timmer joins us now as he gets ready for the charts of the weekend. How do you amend your charts when there was a news bulletin yesterday, the Bloomberg headline, that there's $7 trillion in cash laying out there? How does that affect Will Danoff? How does that affect Jurrien Timmer?
Well, so that's cash sitting in money market accounts. Of course, we are the leading provider of money markets, so we're intimately involved with that cash. But my sense always has been that a lot of that cash it did not flee the stock market in a flight to quality, which is kind of typically what you would expect. And then when people feel more comfortable, they bring the cash back in.
Right.
In this case, the cash came out of the banks during the regional bank crisis, a few years ago, when banks, still are paying 0.5% on deposits, and they were then, and the Fed was raising rates and providing alternatives. So I don't quite see this as a powder keg of cash waiting to chase stocks. And the metric I look at is money market fund assets as a percentage of the market cap in the stock market. And there, it's more in line.
It's more normal.
It's more normal.
Yeah.
So the money came out of the banks. My sense is it eventually will go back into banks, but not necessarily stock.
We need to go into the crown jewel secrets of Fidelity. And Abby, thank you so much for listening this morning and giving us access to Mr. Timmer. I'm going to cut to the chase. What's the elasticity of yield in money market flows? If yields come down 2 decimal points or 1 decimal point or a big figure, when does Paul get out of his money market funds?
Well, I think the Fed is not going to cut as much as many people have thought and continue to think. So maybe it goes to 4. It's at 4 5/8. If that's the case, money market yields stay around 4 or so. And I don't think that is going to create a tsunami, out of cash into other assets, whether it's bonds or equities. So I don't think we're going to have another sort of ZERP era where we go to 0 or 1. And and risk premia in the bond market gets suppressed, and then that money flees into the risk market. So I don't think we're going to get there, but it would take more than what we've seen so far, for sure.
Jurrien, what do you make of the move we've seen in financial markets since the election? Big move up stocks, yields pushing higher, dollar stronger, Bitcoin at 90,000 per token. What do you make of all that?
Yeah, so the markets are always in price discovery mode, right? Sometimes the new information comes in gradually, slowly. A company reports earnings, the stock price adjusts. And sometimes the information comes in all at once, as we had with the election, right? You can tell that people were sitting on their hands. It was supposedly too close to call, so nothing really got done. And the market's brutally efficient in discounting new information. And so on November 6th, it had a lot of new information to discount, and that's what it did, and that's what price discovery is. And so the red wave trade, right, small caps, less Fed cuts, return of the term premium, rotation into financials, energy, industrials, so broadening, that is the trade. And I think in 2016, that trade was pretty much sort of done by December, right? So it happens very quickly. It's not like this is like the first bat of the first inning. Like it's done instantaneously.
You have portfolios at Fidelity that are over 50% in their top 10 stocks, and they're very Mag 70, et cetera, et cetera. What do you see in your chart work on the flows? Luis Yamato would say the distributions in and out of Mag 7 right now. Are we selling? Are we buying? What are we doing?
Well, I think the good news for the Mag 7 is that they're not that expensive, right? I take a broader brush. I look at the Nifty 50, the top 50 stocks, just because I have a data set that goes all the way back to the 60s. And
1860.
And during the early 70s, the original Nifty 50, and the late 90s, the dot-com era, those 50 stocks were trading at twice the valuation multiple as the bottom 450. Today, the top 50 are trading at a 25% premium. So you can't call it a bubble if the valuation is not extreme. The price movements have been extreme, but not the valuation. So what we've seen over the past few months, really since the Fed started cutting rates, is that this has been a bullish broadening. So the market has broadened. 80% of stocks are above the 200-day moving average, but it's not happening at the expense of the mega growers. And in that sense, this cycle in a way has kind of gone in reverse. It's like a Benjamin Button cycle where usually a bull market starts very broad, right? Because the junky low price stocks that got obliterated in the bear market come bouncing back, and then as the cycle matures, it gets more narrow, and the blue chips are left standing at the end, and you get those breadth divergences. This time it's been the opposite. It started with the Mag 7, and then even during the rate hiking cycle, those were the safe stocks to be in because they were immune to the Fed because they had so much cash. And now they're holding their absolute performance, but the market has broadened really since a year ago. And so it's kind of the best that you can hope for. Like a more disorderly version of that would be that the Mag 7 or the Nifty 50 decline because money is moving from those stocks to the broader market. Then the index, the S&P, would have trouble staying up just because of the weight of those 7 stocks. But we're not seeing that yet.
Your title is Director of Global Macro. Where do you see the U.S. versus non-U.S. right now?
Well, so U.S. excellence, has been in place for a decade. And it's interesting, because we're always debating, do we go outside the U.S.? I mean, the U.S. trading at 22, ex-U.S. is trading at 15 PE, so the U.S. is 60% more expensive than the rest of the world, whether it's EM or IFA, Japan, Europe. But you need a catalyst, right? Valuation is not alone. You need relative earnings. Like if you go across the street and you're in the halls of Fidelity, the mantra is price follows earnings. And relative price or relative performance follows relative earnings. And so that is missing between the U.S. and the rest of the world because U.S. earnings continue to dominate.
Price follows earnings. Sounds like Bettina Dalton, 1980. Okay, let's go there. I got an election. I got a belief nominal GDP is going to pop. Do you, within the research of the fundamental animals at Fidelity and what you're doing with charts, agree that nominal is going to pop, revenues are going to pop, and thus earnings will sustain?
Yes, so we're 1 year into an earnings cycle. Trailing earnings are up 8% this year. Forward earnings are up about 12 or so. The expectation is that earnings will continue to grow next year, and if we do get this nominal GDP pop, and earnings are a nominal thing, the earnings cycle can continue. But the thing I worry about is the return of the Fed model. Back in the Greenspanian days of the 80s, bond yields kind of are causing indigestion again, the bond vigilantes, and we've seen that now repeatedly over the last few years, and I think that is a risk for 2025.
You going to be in New York soon?
I will be.
Please, you got to come in because we got to talk about Babson and the global ranking they just got.
Yes, and while you have me on the air, I don't know what your schedule is, but I would like to invite you to come look at our chart room after this show or after
this
you're
is like
done.
the Vatican, folks. I'm going to tear up. You got the Gulf Stream, right?
Oh, sure.
You can go
Absolutely.
over. I don't think I can do it. I think I have to race to the airport.
Okay.
I'm sorry, but Paul's got the Gulf Stream. So we'll do it next time.
Yeah.
Jurrien Timmer, thank you so much. With Fidelity there, and we're efforting a number of their managers as well to talk about this spectacular year we've seen in the markets. Real index outperformance versus many as well. Let's race right now to our news in New York City. Here's John Tucker.
All right, Tom and Paul, the New York Times is reporting that Pete Hegseth, President-elect Donald Trump's pick to lead the Defense Department, was the subject of a sexual assault complaint in 2017 in Monterey, California. This according to public records and Mr. Hegseth's lawyer. No charges were filed. Hegseth, Fox News host and veteran of wars in Iran and Afghanistan, is a controversial choice for Secretary of Defense. Former Pentagon officials have questioned whether he can win Senate confirmation because of his lack of experience for the job. And President-elect Trump's decision to nominate Robert F. Kennedy to head the Department of Health and Human Services puts a prominent vaccine skeptic and critic of the pharmaceutical industry in charge of federal health policy. Let's get more from Bloomberg's Wendy Benjaminson in Washington.
He has tremendous power over all Americans' day-to-day lives. I mean, there was talk that he might get an advisory role, something like Elon Musk and Vivek Ramaswamy got, some sort of off-the-book, project to work on. Instead, he put him right at the heart of Americans' health and diet.
Bloomberg's Wendy Benjamin says Kennedy's views on vaccines and support for things like raw milk and removing fluoride for the water could set him up for a tough Senate confirmation. Donald Trump still hasn't announced his pick to be the next Treasury Secretary. One name that's not on the list is Jamie Dimon. The president-elect ruled out the J.P. Morgan Chase CEO in a Truth Social post, saying he respects Dimon greatly, but he won't be invited into the Trump administration. And Dimon, for his part, says he's okay with that.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
Jamie Dimon speaking with Bloomberg's Lisa Abramowitz at the APEC CEO Summit in Peru. Trump's team considering Key Square Group founder Scott Bessent, who's slated to meet with Trump at Mar-a-Lago later today, Cantor Fitzgerald CEO Howard Lutnick, and the former U.S. Trade Representative Robert Lighthizer for the Treasury role. The decision could come as soon as this week. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
Thanks so much, John Tucker. Greatly appreciate it. Paul, what do you see with the data today? I see sort of just like a healthy pullback. I don't got a lot of news on it.
Yeah, we had the retail sales come in just a smidge weaker, but the revisions were higher, so go figure. So
a mix as well. Yeah. Stay with us. We're in Boston with 92.9 FM. Across the nation, good morning. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got futures in the red. This is after a fresh report showed that Americans, well, they're still spending. The value of retail purchases adjusted for inflation increased 0.4% after an upwardly revised 0.8% gain in September. But right now, NASDAQ futures leading the losses, down 1%, 218 points. Dow futures down 0.4%, 183 points. S&P futures down 0.6%, 36 points. The 2-year yield 4.36%. That's up 1 basis point. The yield on the 10-year 4.47%, and that's up 3 basis points. To currencies, the Bloomberg Dollar Spot Index down 0.2%. We have the Japanese yen stronger, euro stronger, British pound weaker now. Bitcoin up nearly 2% at around 89,000. Shares of Domino's Pizza, they're up 4%. Warren Buffett's Berkshire Hathaway took a stake in the restaurant chain, and it also disclosed a new position in Pool Corp, and that's why those shares are higher, up about 4%. Meanwhile, Berkshire slashed its stake in Ulta Beauty, those shares down 5%. It also cut holdings of Capital One and Charter Communications. And shares of vaccine makers, they're trading lower this morning. This is after President-elect Donald Trump picked vaccine skeptic Robert F. Kennedy Jr. for health secretary. Right now, Pfizer down 1%, Moderna down nearly 2%. BioNTech, ADR's down more than 2%. And Hollywood's legacy companies, well, they're turning the corner on streaming. According to Bloomberg, leading the pack is Walt Disney. It predicts $1 billion in operating earnings from streaming for the fiscal year just getting underway. For all on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. We're in Boston here at the Federal Reserve Bank of Boston. Susan Collins with Michael McKee here in about an hour and a half, I believe, is where we are on that. Paul Sweeney and Tom Keene, and we're going to go a vignette into the past here. And if you look at Wellington, which is a name many of you will know, you think of John Bogle showing up in 1951 to drive forward Wellington, various mergers, Thorndike, Doran, Payne and Lewis, and Bogle went off to invent the index fund at Vanguard and all. But it is one of the great firms, and the way you know that is to know that years ago when Paul Sweeney got on the plane and landed at Logan, you had to make the active management tour. Paint, Paul, quickly the picture of the quick one-day tour of Boston a few years back.
3 or 4 meetings in the morning, a group lunch, and then 3 or 4 meetings in the afternoon, and then you flew back to New York, and you just walk building to building, block to block to see Fidelity, Wellington, Putnam. All that mutual fund money was so concentrated in the financial district of Boston. That was it and continues to be a major money market.
And the thing that's so important here, folks, before index funds is the building to building to building of this Boston investment community. Part of that community now is Barish Khurana, joins us from Wellington today on fixed income as well. Forward, are you clipping coupons, or can, like the legend Dan Fuss at Loomis Sales, can you look for total return?
I do think you can look for total return in this environment. I mean, bond yields are quite high overall. Obviously, we have the election, and there's questions of, I think a common question I get is why haven't there risen more as a result of the red sweep? But I think there's different parts and segments of the bond market that are really quite attractive. I think the TIPS market is one, inflation-linked bonds. You can buy 10-year U.S. real yields at around 2%, which gives you also inflation protection. I think we'll see what comes out of the administration, but a lot of the proposed policies could represent a growth and inflation trade-off, and that generally speaks to lower real yields. And I think the other asset class we really like right now is agency mortgage-backed securities. So these are bonds, backed by Fannie Mae and Freddie Mac. They trade at a spread to treasuries. Currently, that's about 140 basis points, which is about 50th percentile going back over a long history. And I think one of the reasons it's traded at a cheap valuation relative to other credit type sectors is because the banks have not been buying since the SVB crisis. And, as long as the Fed continues cutting, it doesn't have to go all the way to 3, but as long as they're continuing to cut, I do think that could really spur some more regional bank demand for agency mortgage-backed securities. And so we find that sector attractive as well.
Do you expect the Fed to continue to cut? Because we're getting some pretty solid economic data coming out here suggesting that maybe they can skip December, wait till next year to get some more data. How do you think they're going to proceed?
Yeah, well, I'm excited to listen to what President Collins has to
That's
say.
right.
I know she said something. I think I do think they're going to continue to cut in December. When we look at the data, it's certainly been stronger overall. They didn't like the inflation print that we got yesterday and the PPI numbers as well. But overall, I think the one area where the data has actually been on the somewhat weaker side has been on the labor market. And that is really their concern. We had a very weak October jobs print. We also, if we look at forward-looking indicators of the labor market, the quits rate back to 2015 levels. So I think they're looking at the totality of data. Go ahead.
No, off your insight there on the jobs report, Paul, this is percolating.
It is.
Can you adjust at Wellington and say the slowdown in job growth, non-farm payrolls wasn't because of 2 hurricanes, that there's more going on here than we think?
Well, your Bloomberg economist has done a really good job talking
Anna
about...
Wong's killing it.
Yeah.
Don't you steal her. Don't you go stealing her right now.
Well, I mean, we actually looked at that research very carefully. And
looked at her resume. Stop it.
But, I mean, I think she also made the good point about just how there's also this poll workers that have come in. And so we don't know. Yes, there was certainly I don't doubt that the hurricanes affected the labor market. Don't get me wrong. But there are also things that have temporarily boosted the labor market in September and even potentially in October. I think you can just look at the long-term trend in private payrolls. We're growing at, call it around 1% in private payrolls on a 6-month annualized basis. That's not that great, even, ignoring the distortions of the last few months.
The best performing fixed income space year to date has been by far U.S. corporate high yield.
Yeah.
Talk to us about the high yield market, and is there any room left there?
I mean, spreads on U.S. high yield markets at around 270 basis points. You have to go back to really the pre-GFC to get to those typical level of valuation. So I do think spreads are quite tight. It's an environment where interest rates are high. We haven't yet seen the pass-through of high policy rates, I think, to the corporate sector. But given today's valuations, I just think there's better opportunities in fixed income markets, whether or not, as I mentioned, agency mortgage-backed securities or TIPS. I think you can really, you don't need to get high-quality income. You don't necessarily need to go down the risk spectrum in high yield.
Rich, you got one final question. My chart of the year is the Bloomberg Total Return Corporate Index, which was down 6 standard deviations off the long-term trend and has wonderfully recovered this year, 2.x standard deviations. Can you imagine out there in a Wellington time frame that we can actually get the price of fixed income back to the trend we saw before all hell broke loose?
I mean, I think it's really going to depend on the policies that come out of the administration. But I do think that, I think there's so much a consensus that we are in this new normal environment for yields, that it's, higher yields than we experienced for the last bit. And I think if you actually look at the underlying growth statistics, we've grown at about 2% since the end of 2019. That's been roughly productivity growth. That's not very different than we saw for the 4 years prior to the pandemic. And so I'm not sure necessarily that we are in a structurally higher growth environment than we had been, for the past 10, 12 years. If anything, we've had so much government spending, so much fiscal stimulus, we've pulled forward demand into the future. And so, that actually speaks to maybe a structurally lower growth rate going forward than we really experienced in the last few years.
Bruce, thank you so much. Bruce Carana with us, fixed income Wellington management here in Boston. Paul, what's that do to your 30-year mortgage, Paul? I mean, this is like really what people care about.
Yeah, I'm at 30-year.
7-ish?
We're still about 6.8%, and so people aren't going to be refinancing. I see a red headline across the Bloomberg terminal, Tom. Traders pair odds of December rate cut to about 50%. So I'm pulling that back.
It's Catherine Rampell's fault.
Exactly.
So discussion with Jerome Powell yesterday. Think Susan Collins can move that statistic?
I think she can. I think Michael McKee will be right on point there with her.
Michael McKee and Susan Collins coming up here, an important, timely conversation here at the Boston Fed. Again, we welcome all of you across the nation on your morning commute. I've seen more Apple CarPlay this week than I think I have in 6 months.
Okay.
Yeah, all the different cars. Apple CarPlay, good morning, Android Auto on Sirius XM channel 123. And importantly, thank you within 99.1 FM Washington, here 92.9 FM in Boston and Bloomberg, our flagship in New York. We are on YouTube. Subscribe to Bloomberg Podcast. They do it Wellington. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report is brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with the new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, we've had some more economic data out before we get things started here in Wall Street. Retail sales, well, they rose more than expected last month, heading into the holiday season up 0.4% with a boost in car sales that really helped out. All right, let's see how we end things off for this trading week. We'll start with the S&P 500, down 0.6% 0.3%, 36 points at 5,911. The Dow down 0.3%, 162 points, 43,588. The Nasdaq down 0.9%, 179 points, 18,926. We head over to the 2-year yield, 4.35%. That's down up 1 basis point. 10-year yield, 4.47%, and that's up 3 basis points. We have the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro stronger, British pound weaker. We have Bitcoin, well, up more than 1% at around 89,000. Heading to commodities, we have Brent crude down about 0.7% at about $72 a barrel. WTI crude $68 a barrel. Spot gold higher at $2,573 an ounce. That is your Bloomberg Opening Bell Report. Paul and Tom.
Lisa, thanks so much. Greatly appreciated. Paul Sweeney and Tom Keene here, an extended Bloomberg Surveillance this morning. We will go to Bloomberg Intelligence at 10 a.m.
Sure.
Which means we have to talk Bitcoin.
Yes, we will.
We will.
Why not?
We'll do that because we're preparing for Michael McKee's important conversation with Susan Collins. Paul mentioning the red sticky just out on the Bloomberg worldwide of changes of view to the December Fed meeting. That'll be front and center again in that conversation. We're here at the Boston Fed in support of 92.9 FM in Boston. Good morning. Across all of New England, as the Fed covers all of New England. I didn't know this, except for part of Fairfield County. The New York Fed creeps. It's like the Yankees. You know, they creep over. Maybe
Gotcha.
after the way the Yankees played the World Series, maybe they'll pull back. Boston Fed will have all of New England. For many of you, this is the only conversation that matters. This is the Nerd Patrol here at this wonderful finance conference, and holding court, herding cats, is Ken Anadu. He's Vice President, Supervision, Regulation, and Credit Department. That means you and I don't understand it here at the Boston Fed. You own the debate of stablecoin. My hero on this is Raphael Auer at the Bank of International Settlements. He has been brilliant in looking at the behavior of Bitcoin and at the underlying mystery of Bitcoin. We've had a number of people today tear it to shreds. Is there an underlying to Bitcoin and stablecoin, Professor?
Well, thank you, first of all, for having me on the show. And I should say these are obviously my views and not those of the Boston Fed.
Nice disclaimer there.
System.
The woman in the breakfast place giving us omelets took a disclaimer when she gave us the omelets. Continue.
Those disclaimers are important.
Bitcoin.
Those disclaimers are important. So
90,000.
Bitcoin is up almost 90,000. I don't have a whole lot to say about Bitcoin, in part because my focus here at the Fed is thinking about macro financial stability risks. And as I look at Bitcoin, Bitcoin is obviously a risky asset, but I ask myself, how does it interact with the broader financial system? And that's where I spend a lot of my time. So I heard you say stable coins, and maybe let me talk a little bit about that. So my colleagues and I did some work on stable coins a couple of months ago, and perhaps just to level set for your audience, a stable coin is exactly what it sounds like. It's a crypto asset that seeks to maintain a stable price, and they do that via various mechanisms. So what my colleagues and I did was we looked at stable coins and we asked ourselves the question, do stable coins have characteristics and similarities to more traditional financial instruments that we've experienced, that have experienced stresses in the past? And remarkably, what we found is that they indeed do. So more specifically, we found that during periods of broad stress in the crypto market ecosystem, those stable coins that investors perceive as more risky tend to experience investor outflows, whereas those that investors perceive to be less risky attracted some money.
Yeah, Paul, what this means for fossils like you and me is break the buck. Right. That's what we're talking about.
Use cash. Ken, when you look at stability in the financial system, which is a big part of your remit, where is the risk today? Is it technology, or is technology a net positive? Is it foreign actors, just that kind of stuff? Where's the risk to the stability of the financial sector?
That's a fantastic question. I will say that, the way that we think about macro financial stability risks is, we have certain buckets that we look at. So obviously we can't forecast shocks. If we could forecast shocks, there wouldn't be shocks. So we spend a lot of time thinking about vulnerabilities. So first we look at things like valuations. Where are valuations now across a broad range of asset classes, equities, fixed income, etc. And the reason we do that is because, if valuations were to tumble, you can imagine, that having repercussions to the broader financial system. And importantly, one of the things that we spend a lot of time trying to understand now is where are there hidden pockets of leverage that we can't measure? How do those measures of leverage interact with the broader financial system? So I will highlight that one area that I've been spending some time on is just to try and understand the private credit market. To be sure, I'm not necessarily saying it's good or bad, but I want to try and get a sense of, what's this market? What's driving the growth? How does it interact with more traditional financial with a more traditional financial system like banks? And, if we were to have a shock in that sector, what are the potential ramifications to the financial system and also to the real economy?
Well, I'm glad you brought up private credit, because that's something that Tom and I talk to market practitioners about all the time, the growth in that marketplace. Yet it feels to a lot of people that it's not adequately regulated like a bank would be. A, is that assumption correct? And B, what do we need to do about it?
So I will say that, private credit, the first word of that is private.
Yep.
So there are rules and regulations around who can access private credit funds. I don't want to opine necessarily on the differential regulations between private credit and banks. Clearly, banks are prudentially regulated. Private credit are not prudentially regulated. But I think that's one of the questions that we're trying to understand. So as we see growth in non-bank financial institutions, the question is what's driving that growth and how do we think about some of the trade-offs?
I talked to Benoit Cœuré, giant of France, in his work at BIS at the time with Lagarde years ago, about how banks were going to do stablecoin and this away from the speculation of the Doge in Bitcoin. Have we made any progress, or are we spinning wheels?
So I will say that in terms of how banks are engaging in these technologies, they're taking a very cautious approach to it. Most of this is, implementation. I'm sure some of your viewers might have heard about JP Morgan and some of the work that they're doing. They're really just trying to understand the technology, test out some use cases, but not necessarily large scale going into that. So I would say it's still in experimentation phase.
Is there a thought in the central bank system that we have a new president, a new Congress being seated, that financial institution regulations are likely to be relaxed at all? That seems like some of the market participants are buying up bank stocks thinking that. Is there a feeling within your community that there may be some change coming?
Well, that's a good question. And what I will say is that certainly I've been at the Fed since 2011, and I've gone through different, changes in administration. I will say that, at least for me, in our role, going back to what I mentioned before, we have a framework by which we use to assess financial stability vulnerabilities. So we lean on that framework and look at what's happening in the market to determine what kind of ramifications they may have for financial stability.
I want to rip up the script here. Ken, you've taught at Babson. Jurrien Timmer was just in, who's hugely identified with Babson. Babson just received the #1 ranking or #2 through whatever worldwide in whatever way they do. You're in a different perspective there, not professor, not a student or that. You got a piece of chalk in your hand and you're teaching. What is different about Babson?
Oh, that's a great question, and one I did not expect. I will say that I don't teach at Babson anymore. I did.
Yeah, no, you did.
But
they threw you out, but fine. What's the Babson difference within the competitive academics of finance?
I'll say that one of the things I really enjoyed about Babson is a program that they have called the Babson College Fund. It gets students together. And, it's a year-long program, which I participated in, and they actually manage money. So it gives you a real-world experience in terms of how to value securities, how to think about the impact of, exogenous factors on securities valuation. Certainly had a good time there.
And, of course, within the Babson experiment, folks, this is a really world-famous program. They use the Bloomberg terminal, don't they?
Yes, they do.
They do use the Bloomberg terminal, although I want to be careful that I'm not doing an endorsement.
Oh, no,
but I do think that I think a lot of people use the Bloomberg terminal, including Babson.
The Fed, his career, he's so done. He's going to the Dallas Fed. The Boston compliance, they're over here. Oh, it's a folks pa.
So we got, what's next year? What are you looking for at this conference today?
That's a great question. So I'm going to be moderating a panel that will focus on decentralized finance. What is it? How does it work? And importantly, we'll spend a lot of time asking ourselves questions. What are the costs of this? What are the benefits? Could it really revolutionize the financial system?
Ken, decentralized finance is when Paul and I get our paycheck and it's spent out to all the offspring. That's decentralized finance. We're out of time, thank God. Kenneth Anuta, thank you so much. He is with the Boston Fed and truly expert on, ready, Paul?
Yep.
DeFi.
Oh, that's what the
What
kids
in
say.
God's name is DeFi? I mean, Matt Miller
It's up to
knows,
Ken to
right?
figure it out.
Ken, thank you so much. Really important panel here today. Right now, with the markets open, the news in New York City, here's John Tucker.
All right, Tom and Paul. President-elect Trump making waves as he fills his cabinet, naming Robert F. Kennedy Jr., a campaign rival turned Trump supporter, as his Secretary of Health and Human Services. Now, Bloomberg's Wendy Benjamin says Kennedy's views on public health are unorthodox.
He has advocated to remove fluoride from our drinking water, which has been in our drinking water for 80 years. He has talked about making vaccines optional, which would make public schools a possibly disease place.
Bloomberg's Wendy Benjaminson says those positions on public health could set Kennedy up for a tough Senate confirmation. The New York Times reporting this morning, Pete Hegseth, President-elect Trump's pick to head the Defense Department, was the subject of a sexual assault complaint in 2017 in Monterey, California. A statement issued late Thursday, Monterey Police Department said it investigated an allegation of sexual assault involving Hegseth at the Hyatt Regency there, and no charges were filed. Senate Democrats plan to use their last weeks in the majority to try to make public a House sexual misconduct probe into Matt Gaetz, President-elect Donald Trump's controversial pick for Attorney General. Let's get more from Bloomberg's Scott Carr.
Chair of the Senate Judiciary Committee Dick Durbin issued a statement calling on the House Ethics Committee to preserve and share the report on Gaetz, who's been the subject of an ongoing House investigation into allegations of sexual misconduct, illicit drug use, and misuse of campaign funds. Republican representative from Kentucky Andy Barr tells Bloomberg he thinks the committee needs to release it.
Yeah, I think the Senate will demand that. I think the Senate will need that information in order to work its will in the advise and consent process.
So far, Director of the House Ethics Panel Tom Rust has declined to comment. In Washington, I'm Scott Carr, Bloomberg Radio.
In the meantime, the incoming Senate Majority Leader John Thune tells Fox all options are on the table to clear President-elect Donald Trump's nominees, including allowing them to take their jobs without Senate confirmation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
John Tucker, thank you so much. Greatly appreciated. Paul, discuss.
Yep.
The banks are up. Everything else is down, and the banks are up today. I don't get it.
I mean, it's just, I think it's just about, some of the discussion words from Jamie Dimon. He expects M&A, maybe among banks, but certainly any M&A activity across the world. When you're J.P. Morgan, that's a good thing for your advisory business.
And Brammo got so much out of them. It was because they were in Peru.
Well,
have you been to Peru?
I've not been to Peru.
I've never been to Peru. I was supposed to go for the IMF and couldn't go. Brammo in Peru.
Perfect.
With James Dimon, a very informative conversation. Look for that out on Bloomberg Digital. The market's open right now. Finally, a pullback off the election celebration. We're in Boston at the Boston Fed. We say good morning to all of you across the nation. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks lower after U.S. retail sales advanced in October. 8 of the report's 13 categories posted increases, led by electronics and appliance stores. Auto sales posted the strongest advance in 3 months. We have NASDAQ, the NASDAQ down 1%, 250 points. The Dow down 0.3%, 134 points. The S&P 500 down 0.6%, or 40 points. The 2-year yield, 4.36%. That's down up 1 basis point. The yield on the 10-year, 4.49%, and that's up 5 basis points. The Bloomberg Dollar Spot Index down 0.1%. We have the Japanese yen stronger, euro stronger, British pound down about 0.1%. Bitcoin up more than 1% at around 89,000. Shares of AI software maker Palantir up 6%. That's after it said it was transferring its stock listing to NASDAQ from the New York Stock Exchange. And a few companies making news. Sources say General Motors plans to cut about 1,000 salaried workers globally. That's in an effort to cut costs. And finally, Hyundai has named Jose Munoz as CEO. He's the first foreigner to head that company. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Here is the secret, folks. When everyone on Wall Street wanders out to a soccer game at 2 o'clock, but they're completely wired in, this is a miracle. This is the Bloomberg Launchpad on a cell phone, and it's basically carrying the terminal from your office. And this is what I work off now. And what it's telling me is markets are on the move, making the Susan Collins interview here in less than an hour more than important. An extended edition of Bloomberg Surveillance this morning from the Boston Fed, Paul Sweeney and Tom Keene on YouTube, on your commute across America. Good morning. On the West Coast. And, Paul, there's one statistic that sticks out. The 10-year inflation-adjusted yield up a massive 6 beeps, 2.16%. And this folds right into Fed's study as you bring in our new guest here, Simona.
Absolutely. Simona Mukunda. She's the chief economist for State Street. Simona, thanks so much for joining us here. Boy, the world's changed in the last 8-9 days here. Inflation seems to be back on the table when you think about some of the policies that a Republican government would like to enact. How do you think about the inflation implications of some of these discussions?
I think the first thing I do is try to not overreact and try to get a little clarity on what actual policies will be pushed through. I think there was a lot of wisdom in what Chair Powell said last week, that we don't guess, we don't speculate, we don't assume. Of course, we markets speculate and economists and investors assume, but there is a limit to how much we should assume on day one. I think directionally, absolute agreement that when you look across the range of proposals, whether it's on immigration, whether it's on trade policy or fiscal policy, I would agree directionally these initiatives are inflationary. What I think we do not know, and I'm really skeptical that anybody knows for sure,
right,
what's the magnitude of this? And we should not forget the backdrop in which these policies are implemented is hugely important, right? The labor market is my perhaps...
Okay, you sound like you're at a Fed press conference. I mean, you're sitting down with Susan Collins or Jerome Powell, and every bit of history I know is they will delay. I mean, they're just going to slow things down like you to observe what happens to the magnitude, right?
But I think there is wisdom in that. I think we came, lots of lessons learned over COVID. What was the one thing that so many people claim with certainty, that you will not be able to bring inflation down from 9% without causing a recession? And that was proven wrong. Mm-hmm. Now, I don't want to go into the next mainstream conclusion before the facts are even on the table. I have changed the forecast somewhat. I will tell you, middle of the year, all of last year we were talking about a soft landing, but in the middle of the year I started worried about that forecast because the Fed was very hawkish and, just one cut for the year. That worried me. Now I would say I'm thinking less in terms of soft landing and perhaps no landing at all. That doesn't mean necessarily reacceleration, but kind of steady at a decent growth pace. And I have taken 2 cuts off the table over the course of through the end of 25. But let me explain why. One of them had nothing to do with the election. It was really a reaction to the incoming data, a reaction to massive revisions in the gross domestic income data. The savings rate has moved up significantly, right? So I think this is another reminder, frankly, that we forecast, but our raw material has deteriorated in quality. If I can, make a plea out there to whichever party is in the administration, we need better data. And I think we need investment into ensuring that the macro data is accurate, is as complete as possible. Just the other day, right, we had a big upward revision to unit labor cost. That changes the view a little bit. So the first cut came off before because of that. The second cut is because of uncertainty and the direction of policy.
If labor is the focus here, what's your view of the labor market here? It was very oversupplied there for a while. It seems like it's more in balance these days. Is there the risk that we get it going the other way? We see unemployment start ticking up faster than the Fed might want.
So I think that's where the demand backdrop really matters a lot, right? There was a time when we had 6 million excess job openings relative to the number of unemployed. That gap has shrunk to about 500,000. Now, what you do on policy matters greatly. And, the saying is that the devil's in the details, but maybe the saving grace is also in the detail. When we talk immigration, deportation, what does it mean? What are the numbers? I would say the labor market is pretty much in balance, because I see things like the quits rate being the lowest since 2015, hours worked the lowest since 2012. I should not see those things if the labor market truly is tight. Now, that to me says labor demand has come down. Now we are talking about policies that potentially impact labor supply, reducing it by how much? And what happens to labor demand from here on? Does it moderate further, in which case maybe you'd maintain a balance, but at a lower level of supply demand.
In the huge uncertainty that we have, can you frame for the people at State Street, can you frame where nominal GDP is going to be? Can you say above 4%, below 4%? Can you give me a 5% number on nominal GDP forward? Or you just can't do it?
I think you can. The 4 to 5% range seems very reasonable to me. I would not be surprised by a 5% number. We are talking, roughly 2% real growth and some inflation on top of that, whether it's 2% or 2.5% or a little bit more than that. And again, horizon, 1 or 2 years is one story. What's the long-term, view? And I think that's where you come back to the 2.1% real yield on 10 years. Is that sustainable? Do we grow for the next decade fast enough to sustain that? And I think that's important, because we talk about financial conditions, we talk about stocks doing great, and financial conditions in the traditional metrics look great. But long-term borrowing costs at the level where they are, I think, are actually restrictive.
Brings it back to the elevated real yield heading out near 2%. Certainly my move of the day right now. Simona Makata, thank you so much with State Street for briefing us this morning here at an important Fed conference in Boston. We welcome all of you across the nation. Of course, within the hour, our Michael McKee in conversation with Susan College, made critically important by this coming just after Jerome Powell's conversation with Catherine Rempel yesterday, which certainly not upset, but jostled, I'd say, the markets as well. It is a special edition of Bloomberg Surveillance, and the special edition means Paul Sweeney has to put up with me in the 10 o'clock hour.
There we go.
Crime and punishment there. But we're going to do it. We're going to stay with you now through Bloomberg Intelligence. We're going to have a special edition of Bloomberg Surveillance with good conversation. Matt Mishkin with us, and Adair Morse, the keynote here off of Berkeley Haas, will be with us as well. Again, Susan Collins on the Fed, the foundation to your investment, will do that. We're on YouTube across America and worldwide. Good evening in Asia right now. YouTube, please subscribe to Bloomberg Podcast. It's the quickest way to get to us on YouTube. And on our commute across the nation, Apple CarPlay, Apple Android Auto, I should say, as well. Again, President Collins of the Boston Fed with Michael McKee will do that in a bit. From Boston, this is Bloomberg Surveillance.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Federal Reserve Bank of Boston in Boston, Massachusetts. Tom Keene, Paul Sweeney, we are live here at the Federal Reserve Bank of Boston Future of Finance Conference. We got a lot going on. We have an extended Bloomberg Surveillance program for the next hour. We're going to kick it off strong. Adair Morse, conference keynote speaker, Tom, and professor at UC Berkeley's Business School. We'll get her thoughts on AI and technology. That's going to get a little high end, I think. Matt Miskin's going to join us as well, co-chief investment strategist at John Hancock Investment Management, just across the street. We get his thoughts on Jay Powell's comments yesterday and where the Fed may be going here. And then at the bottom of the hour, Tom, we've been talking about it. Michael McKee is going to interview Boston Fed President Susan Collins here in Boston. We'll bring that to you. It should be very interesting.
Well, it's going to be very interesting. But yesterday, 24 hours ago, it was just a chat.
Yeah.
And then something happened yesterday. Catherine Rampell of the Washington Post cornered Jerome Powell and really got some news out of it that I would say moved the market this morning, and President Collins has to follow up on that. My key statistic, the 10-year real yield is now in moonshot territory. We're not to 2%, but folks, I really want to make it clear. Markets are moving this morning after the election celebration we've been seeing.
Absolutely, a little bit of a pullback in the markets. Let's get right to that. We'll go to Lisa Mateo back in New York for a Bloomberg Business Flash. Lisa, what do you have for us?
And it's Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. Treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. We've got stocks slipping after this fresh report that showed Americans, well, they're still spending. The value of retail purchases, unadjusted for inflation, increased 0.4%. That's after an upwardly revised 0.8% gain in September. October, also a tough month for America's factories. We had the strike at Boeing, the pair of hurricanes that really took a toll on manufacturing for a second month, cutting industrial production. And finally, a separate report. It shows import prices rose for the first time in 4 months in October. So we have the NASDAQ down about 1.5%, 291 points. The Dow down 0.6%, 265 points. And the S&P 500 down about 0.9%, or 56 points. The 2-year yield, 4.35%. That's little change. The yield on the 10-year, 4.48%. And that's up 4 basis points. The Bloomberg Dollar Spot Index down 0.1%. We have the Japanese yen high, stronger, euro stronger, British pound weaker. We have Bitcoin edging higher again, but still holding off its recent highs of 93,000. It's currently at 88,000. We have shares of Domino's Pizza up nearly 2%. That's after Warren Buffett's Berkshire Hathaway took a stake in the restaurant chain. Now, it also disclosed a new position in Pool Corp, and that's why those shares are up more than 2% this morning. And meanwhile, Berkshire slashed its stake in Ulta Beauty. That has shares down 2%. It also cut holdings of Capital One and Charter Communications. And finally, sources say General Motors, well, it plans to cut 1,000 salaried workers globally. That's in an effort to cut costs. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. We appreciate that. Tom Keene, Paul Sweeney, extended version of Bloomberg Surveillance this morning. We're at the Boston Federal Reserve Bank. They got their Future of Finance conference there, so you can check us out there. We're also on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Tom, Boston, 92.9 FM, our news signal up here, giving us a great signal in the greater New England area. Let's kick this hour off strong. How about the keynote speaker at this whole confab here? Adair Morse, conference keynote speaker and professor at UC Berkeley's Business School. Adair, thanks so much for joining us here. You're a keynote speaker here today. What are you going to be talking about?
I'm going to be talking about AI and the use in credit. So thinking about not just in understanding AI in terms of deploying and getting better precise underwriting and knowing people's risk and this sort of stuff, but there's a general landscape of using AI for all kinds of provision of lending to people, and then there's some red flags, right? And so kind of putting the landscape out there, we need to think about both sides. We need to inform not just policymakers, we're here at the Fed, but but also the providers, right? So they can think about things that they need to step up and understand.
We were back last time I was up here in Boston. We were doing some work with the Boston Consulting Group, and they were saying as they talk to their clients across all industries about the use of AI, they want to get a commitment that they will do it in the correct way, and really, because AI is so powerful that you want to make sure that whoever they're talking to, that they make a commitment to doing it in the right way, the sustainable way. How does that apply to finance?
Right. So the problem is there's so many different aspects of what correct means. Yeah. Right. So if we think about AI, where it's going to be deployed, right? It's not just it's understanding credit risk and reaching more of the population in ways that biases are hindering. So that's great. There's also targeting and marketing. There's monitoring. There's chatbots to get information, authenticating fraud, right? All these sort of uses. Along the other side, though, we have to think about things like there's been research that finds that AI teaches itself how to collude, right? Which has all kinds of, your mind goes crazy when you start thinking about that, and then AI can be deceptive in conveyance to get an outcome it wants.
So this is a sequel to The Matrix 2 or something? I mean, really, that's what Reeves shows up, right?
Right.
Paul can play Reeves. I can't play Reeves. Come on. Most of the public is scared stiff of this. Let's begin with a timeline. Are you looking out to 2030 or are you looking out to 2040?
Or 2025, right? I mean, AI is already being used.
Are we ready for this?
We're not ready, nor are the providers ready, right? The providers themselves are concerned about there's startups left and right? And what are the startups doing and what inputs are we using? Do we let AI go on all the data that's available about someone to profile them?
But you fly into Park Avenue and you're going to talk to James Dimon and his team at J.P. Morgan. You're going to bring Ike Green of Berkeley along just to impress everybody. And they're going to go, we need to trust this process. What's the trust factor at this conference in Boston? Do people trust AI?
I think I don't know the answer. Do they trust? I don't think they know one way or the other. I think where we are is that right now, if we understand what inputs AI is using, so you can control that, right? Where it's going, what information it's using to make decisions. If you control the inputs, you're able to put a bound on what it can do, right? You can tell it not to lie. You can tell it only to use these certain inputs that are non-discriminatory, and other things. Right now, how that input use is getting deployed is a black box.
How, from your research, talking to providers of credit, how are they using AI yet? Are they using AI, or is it still the loan officer that I got to convince I'm a good credit?
No, definitely they are using AI, right? I mean, from the simple way, the chatbots, right? Getting information in, right? Those are AI driven, but also the processing and understanding under general parameters, right? Under, how would you maximize for profitably lending, or how would you for profitably marketing new products to people, right? They are are they deploying underwriting at a full scale using AI yet? No, probably not. There are some exceptions to that, but we're using it little bits here and there, and pretty soon the whole arena changes.
Is America behind on this, or are we leading the way?
Probably leading. Leading is not, there are other countries that are also deploying. China's deploying. There's a whole movement in Europe and a law in Europe regarding some of these things. And so we are ahead, but we are with others in that lead.
So, Paul, I got a credit rating of 100. It's like so low. They don't even talk to me. And I get emails all the time. We'll give you 45,000. We'll give you 10,000. Sure. Is that AI driven? Is it your fault?
I don't know the answer to that question, but that's where we are, right? That's where there are people that are, they have credit scores that maybe those credit scores are not right, and maybe AI helps, right? And then there are other people that,
All right, well, here's my concern. Is that small community banks, they're not going to be able to make the technology investments. Therefore, whatever benefits may be out there, and I don't know if there are, by the way, you have to convince me, I'm afraid that they're not going to have the same capabilities as, say, a J.P. Morgan Chase.
So I'm a big fan of having a community financial architecture, banks, the lenders, the CDFIs, right? And the reason it's so important is because in downturns, the research shows that these local community-facing lenders and banks, they're able to stick with their customers when they need them the most. So far, technology has not replicated that. Now, whether AI becomes a localized lender because its ability to act local is a question we don't know. And what does that mean for the financial architecture of the United States is a complete unknown.
So, I mean, at the end of the day, if I'm providing credit, I want a good credit environment where I get paid back, where I'm able to distribute, debt into my marketplace, but I want to get paid back. I don't want to take undue credit risk. Ideally, AI will help me do that better.
Ideally, it will help you do that better, and also to manage new products and new services for customers to figure out where they might be exposed to risk or where they might be evolving in their business or household.
30-second question. We don't have enough time. It's unfair. Type 1, Type 2 construct. Is AI in banking going to help banks or help them not lose money?
It's going to help them grow their business.
Type 1.
That's kind of what they want to. That's what they want to hear. Adair Morse, thank you so much for joining us. Adair Morse, she's a professor of finance at the University of California-Berkeley. Love that school. Beautiful campus out there in the Bay Area. It's the Haas Business School. Great business school there as well. Talking about this market here, Tom, I think what we're seeing is just a little bit of that risk off because we had such a risk on euphoria. You look at your favorite Bitcoin raced from about a $60,000 level up to about pushing up to $90,000. That's kind of tells you what the markets, the animal spirits were just in the aftermath of the election.
Hot stove leak. It's almost cold here.
I know.
We're in Boston. The Red Sox make their first transaction. They are pennant bound. They took a piece of meat, Justin Wilson from the Cincinnati Reds.
Oh, boy.
To fill some innings throwing left-handed.
What happened to your Red Sox? They used to spend like they were a major market team.
You know how Judge dropped the ball in the fifth inning?
Oh, yeah.
The Red Sox did that all year.
Okay. You got to have the Sox back because the Yankees,
Justin Wilson,
that good rivalry.
Reds.
Exactly, right.
Give me Dela Cruz.
Anybody. S&P 500, we're off 62 points. The Dow's off about 250 points. That's about 0.6%. NASDAQ taking it on the chin, off about 1.7% there. That's about 328 points. Looking at the yield curve, time yield's coming a little bit higher here, backing up 4.47 on your 10-year. We will keep an eye on that. And then, of course, looking at WTI crude oil for Alex Steele. I know she's listening. We are just around $68 per barrel WTI crude oil. Gold higher again. Dennis Gartman, we call that out for Dennis Gartman. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. Traders price in roughly 50% chance that the Fed delivers a quarter-point reduction at its December meeting. Now, that's down from about 80% earlier in the week. So now the NASDAQ off about 1.5%, down 345 points. The Dow down 0.5%, 249 points. And the S&P 500 down about 1% at 64 points. The 2-year yield at 4.34%. That's little change. The yield on the 10-year 4.48%, and that's up about 4 basis points. The Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro stronger, British pound now weaker, Bitcoin down about 0.2%, still around 88,000. To commodities, we have Brent crude $72 a barrel, WTI crude $68 a barrel, spot gold higher at $2,569 an ounce. Shares of vaccine makers, they're trading lower. This is after President-elect Donald Trump, he picked vaccine skeptic Robert F. Kennedy Jr. for health secretary. So now we have Pfizer down 4%, Moderna off about 6%, and BioNTech ADRs falling 5%. And shares of aluminum producers were there on the rise. This is after China canceled that tax rebate on exports of certain commodities. Alcoa up 8%, Century Aluminum up about 13%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
All right, Lisa Mateo, thank you so much. We appreciate that. Tom Keene, Paul Sweeney, we are live here at the Boston Fed Bank in Boston, Massachusetts. It is our Future of Finance conference here. And we're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Bloomberg podcast. That's where you'll find us. And here in New England, Tom, 92.9 FM, a big signal. Great being in Boston. So many great memories for me here as a sell-side analyst coming up here talking to the great mutual funds like Fidelity, Wellington, and one of the heritage names, Tom, John Hancock.
And the biggest problem in the modern day is your appointment. Am I a new John Hancock or old John Hancock?
Well, how do you find newer?
The hours were wasted on that. Which skyscraper to go?
They've been there forever. Matt Miskin joins us. He's the co-chief investment strategist for John Hancock Investment Management and a noted Boston Red Sox fan. John, thanks so much for Matt, thanks so much for joining us. Hey, Matt, what changed for you and your team last Wednesday morning when you guys got into the office and huddled around to say, the world's changing a little bit out there?
Yeah, we're seeing a macro knuckleball. And this is a Tim Wakefield reference. May he rest in peace. Growing up outside of Boston, watching Tim Wakefield pitch was one of my favorite things. It made batters feel like they didn't know where they were going, what was happening. But in terms of a knuckleball, what you want to do is you want to wait on it and then be reflexive. You don't want to actually start the motion of hitting right away because actually it's going to get you out of place. And right now there's a lot of unknowns. We really don't know what policies are going to be introduced, how they're going to be implemented. You hear Powell yesterday really talking to this, saying, look, we can't adjust policy yet. We don't even know what's coming. Mm-hmm. And so for us, the biggest thing has been about batting average. And we've been overweight the U.S., we've been overweight quality, and we continue to hold that as a high conviction. The economy is roaring coming into this. It's likely to hold up pretty well relative to the rest of the world. That's our favorite place.
Perform in the meeting how you and Emily Rowland come up with this. Emily has been absolutely sick, dead on. Is it what you got right or what you avoided not screwing up? Which one mattered?
I think it's both. I mean, the getting right was the quality call on the U.S. saying, look, this is the best earnings, this is the best ROE, this is the best balance sheets in the world. We got that, but it wasn't chasing the hot dot every time. There's been junk rallies in small caps. There's been junk rallies outside the United States, and we just never changed our view for a quick buck or a quick tactical trade. Mm-hmm. We've been more strategic in this. We've gotten this right over the last couple of years. And what we're looking at next in the next couple of quarters is probably the bond market and saying, look, these yields have backed up. There's some really good income opportunities being presented today. That's something we're going to be gravitating towards. But for now, we're holding that high quality U.S. exposure.
One of the narratives that's gained some momentum here since the election is inflation. Could be coming back. How do you guys think about that?
Yeah, so if you look at consumer surveys, you look at business surveys, the public enemy number one has been inflation. And, as it relates to the macro backdrop, we were starting to get progress, but it's stagnated. It hasn't been coming down as much as we'd like to see. We have three key things that we think are going to develop in the next year that are going to cause inflation to come down. One is oil prices. I mean, we're just talking about Alex Steele's probably watching the oil market. Oil prices here dropping below 70. We're going to get more oil supply probably. That's going to weigh on inflation because it's going to be lower gas prices. We've got housing market that's seeing increased supply. Mortgage rates are up. The bond market is doing the Fed's job right now. It is pushing the 10-year up. That's going to increase mortgage rates. That's going to weigh on inflation and growth. And then wage growth is decelerating. The quit rate is coming down. Job openings are coming down. So we think disinflation is coming back into 2025 regardless of what's happening. And we want to make sure we grab some high-quality bonds while we still got the yields to provide that income.
All right, Matt, thank you so much for joining us. Really appreciate it. Matt Miskin, he's over there at our good friends at State Street, Tom. Coming up, we're going to have a pretty interesting conversation with Mr. Michael McKee.
It's going to be interesting to say the least. Matt Miskin, thank you so much with Emily Rowland over at John Hancock today. I think this interview was just, folks, okay, another interview with the Fed president, Neil Kashkari, with us the other day, and Matt. But it came very complex yesterday with Jerome Powell dealing with some really intense. Why isn't Rand Powell in the Fed meeting? Why isn't she in the press conference?
I don't know.
I guess she's too large to do that, but they ought to get Catherine in there. There was some real news out of that, and it moved the markets. And Paul mentioned a headline out here earlier this morning, I'm going to say within the last 90 minutes, where, the December meeting now is on the edge of mystery, which makes for good entertainment, but what does it mean forward? And really, Paul, all the interviews we've pieced together today here at the Boston Fed has been uncertainty.
Yeah,
people really don't know what's driving forward, and we'll have to see on that as well. Again, to me, and a little inside baseball, the inflation-adjusted yield, the real yield, spikes up off of the election and has broken through and moves near 2%. I don't have that number in front of me right now, but it's nevertheless elevated, and that really impinges upon business and folds into the financial system. There are going to be some close questioning here of Mr. McKee with Susan Collins. Let me tell you a little bit about here. The roar you heard when she was selected by the Boston Fed was far and wide. She is out of Michigan, essentially. Her academics, Harvard and MIT, but far more, her academic work at the University of Michigan was legendary. She really did an immense amount there as a Gramlich professor. Can't say enough about the public institution at Ann Arbor. They minted Claudia Sahm, among others, as well. But as an academic and with an academic process, she brings prodigious economics in real time to the Boston Fed. Now, our Michael McKee, an important conversation with the president of the Boston Fed, Susan Collins.
Bloomberg TV viewers and Bloomberg Radio listeners around the world. I'm Michael McKee, the international economics and policy correspondent for Bloomberg, and we are at the Boston Federal Reserve Bank today. They're holding their 68th annual economics conference, and we're joined by the president of the Boston Fed, Susan Collins. Thank you very much for being with us today.
Delighted to be here. Thanks for being at the Boston Fed.
It's great. We tell everybody it's a beautiful day, but it's 39 degrees, so winter is finally hit here.
Seasons are wonderful.
So speaking of winter, December 18th, you have another Fed meeting. And at this point, there seem to be some questions about whether or not the Fed will be cutting rates again, because this week we got some firm inflation news. Retail sales were okay, but not particularly strong. At this point, are you thinking that we should see a cut, or is it better to pause and wait?
So I think it's important to say there's no preset path. I do see rates as still in the restrictive range, which means that over time some amount of easing will be appropriate. But, you know, the economy's in a very good place right now. And inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. The goal of policy is really to sustain that healthy set of conditions, recognizing, you know, there are risks on both sides. And so I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18th.
Well, the data this week showed inflation a little bit stronger than it had been in the CPI and the PPI, and those who do the nerdy calculations for the PCE say we're going to see the same thing. Should you keep your foot on the brake a little more then, because inflation is not back down to your target?
So, you know, I don't focus too much on any one data point. I think it's really important to look holistically. And when I do that, what I see is that, first of all, inflation has come down significantly. I focus on the, a couple of month averages. And if you take food, energy, and in particular shelter out, the rest of inflation has actually been in the range consistent with the 2%, exactly what we'd like to see. What's really still elevated is shelter, and that is taking time to come back down, and a lot of that really reflects shocks from the past. I'm not seeing evidence of new price pressures, and so I think it's important to stay the course, but that analysis of the data is part of why I thought it was really appropriate for us to begin easing in September and to be in an environment where we are really looking over time methodically, perhaps patiently, to be normalizing policy, to maintain those healthy conditions that I talked about a moment ago.
Well, let's look at the other side of the mandate, employment. We had a very strong employment report, and then we had a very weak employment report, granted affected by hurricanes and strikes. So what's your judgment of where the labor market is when you look holistically at all of the labor data?
So again, when I look at all of the data, and you're absolutely right, there have been some stronger readings, there have been some readings over time that were a bit weaker, and there are a lot of special factors. So looking at averages over time, looking at the range of information, what I see is a labor market that looks similar to conditions that we've considered full employment. So in terms of job openings and quit rates and the fact that wage growth has been coming down, and given the high productivity we've seen is consistent with the move back down to 2% inflation and staying there. And unemployment has stayed in a range that is near 4%, low by historical standards, so yes, higher than a year ago. So all of that to me says healthy labor market conditions, things to watch carefully, and don't focus too much on any one piece of data. We have to look at the whole picture.
All right, healthy labor market. Inflation's coming down, even if it's stalled a little bit, but it's in the 2s. And the economy is stronger than people had forecast. So do you agree with Chairman Powell in saying there is nothing telling you have to cut rates very quickly?
So I think that I agree that I don't see a big urgency. At the same time, I do think that preserving those healthy conditions, right? I mean, that's what our mandate really is from Congress. Price stability and maximum employment sustained over time, not just at some point in time. And so, as I said before, I do see the policy stance as being in a restrictive place, and over time, normalizing that, I think, is going to be important. But we're well positioned to be really careful in assessing the data and making decisions about the pace, about the timing, and so that that's how I think about that.
Let me ask about the elephant in the room, and that is the new president-elect of the United States. His policies have not been fleshed out. Chairman Powell's made it clear you don't know exactly what's going to happen, but do you expect that something in whatever his fiscal plans are will affect the economy, and you will have to take another look, say, at what your economic projections are and what the dot plot projections are for 2025?
You know, as we get information about the economy, certainly that includes about fiscal policy, of course it's really important to factor that in. And there are lots of things we look at. Fiscal policy is certainly one of them. But I don't want to speculate on what policies that, haven't been enacted or implemented might look like.
Well, do you think that tariffs as an economic concept add to inflation?
They can. And again, we would have to see if there are tariffs that are implemented, more about the specifics and the dynamics for those.
Now, if there's a fiscal impulse in whatever the president-elect chooses to do, is the economy growing too fast for that right now? Would that be a danger, a worry?
So again, I think there are lots of things that determine how the economy evolves and grows over time. Fiscal policy is certainly one of them, and certainly does have an impact on that, and we'd have to factor that in and look through that. I do think, and Chair Powell has also said this, that fiscal policy at the moment is on a path that's not sustainable. But again, when we make our policy decisions to focus on our mandate from Congress, it's really based on the data that we have available and the analyses and the assessments that we can do on that basis.
As far as I know, President-elect Trump has never threatened to fire you, but I wanted to ask, what is, in your mind, the relationship between the Federal Reserve and the executive branch?
So what I would say is that the Fed is structured by Congress as an independent body, and that is important in terms of the ability for us to do our job well. There's a lot of analysis that shows that independent central banks are more effective at keeping inflation low and stable. And we have really seen how important it is to keep inflation low and stable in terms of the impact the higher prices past inflation have had. And so, I think that is a very good structure to enable us to do our jobs well.
So the things that come across social media are basically just noise in the background to you as a policymaker?
I am very focused on doing my job, and there is more than enough to keep me very focused and very busy.
Now, the people you can't see them. I can see them out there, all the traders on their knees going, tell us when you're going to do this sort of thing. Can we basically say, because of the potential changes that are coming and the data that we have seen, that the dot plot for 2025 and the SEP for 2025, those are kind of out the window now, and we should really wait until December or even later to get a good idea of where you think you're going to be and the economy is going to be?
Things, I think, always evolve, and so in about a month or so, we will have a new SEP and information from all of the policymakers about what they think. And so I think it's always true that, you know, in the middle of the SEP information, you don't want to take too much from what might have been written down, penciled in, I would say, a number of weeks earlier. A lot of the data evolves. What are the people in these tall buildings around us, all the corporate leaders in your district, telling you about how they see the economy going forward and their plans? Yeah, and I appreciate you asking about that. I think one of the really important things that I do, that my colleagues do, is talk to people across the economy in lots of different sectors. So being out and about throughout New England. And what I'm hearing is pretty consistent with what I said at the outset, that people are cautiously optimistic. They see an economy that seems resilient. Labor markets have moved into much more normal conditions relative to the kind of unsustainable, more overheated conditions from a year or more ago. And the price pressures really have abated considerably. So that's all very consistent. But of course, you know, the aggregate data masks a range of different specifics across individual firms and sectors and regions. And it's really, I think, helpful to hear all of that and pull the qualitative information together with the statistics.
One last question at your conference. It's on financial technology this year, and the Boston Fed's been in the middle of financial technology. Yes. And just coincidentally, coming up at the top of the hour, we have our Bloomberg Technology Show. Perfect. So let me ask you, a lot of tech talk over the last 5, 6, 7 years has been tech talk. How fast are we going to see some sort of impact on the average person from new payment systems? I realize you have FedNow in place, but how fast are people going to say, hey, this is something different? And are we going to see any kind of digital currency adoption, whether it's private or government, in the next few years?
So, you know, the impacts of technology have many, many dimensions, and I think we're already seeing some impacts in terms of the roles that Fintech are playing across our economy in different ways. And the conference today and tomorrow is intended to really bring experts together who have knowledge and done analysis from different vantage points to see, as we put together the things we know, what are some of the things we don't know and need to know better? And so what we're really focusing on is a number of different themes, including financial inclusion. What are some of the implications of the innovations for access to financial services? And then also, what are some of the implications of technological innovation for the transmission of monetary policy, for our supervision and regulation of financial institutions, and also for financial stability. So thinking about both the opportunities and the risks. And I think we are already seeing some of those implications, but it's still unfolding, it's complicated, and it's moving pretty quickly. So that's what we're trying to better understand. And again, we're delighted that you're all here while we're in the midst of a conference on an important topic.
Well, thank you for having us. Susan Collins, the president of the Federal Reserve Bank of Boston. We'll send it back to you now.
All right, Michael McKee, thank you very much. Bloomberg's Michael McKee. Speaking with Boston Fed President Susan Collins here in Boston. Tom, I think what I heard President Collins saying, you know, they are not taking possible rate cut off the table in December. That's still there, so a little bit of a clarification there. And I think she resisted the the possibility of speculating on what policies may be changing with a new administration. I don't think she wants to stay away from speculation there.
Yeah, Dow's down 300 points. It's her fault.
Exactly.
Yeah, I look at it, folks, and really one of the messages that we've seen here since 7 a.m. this morning is uncertainty.
Yep.
The uncertainty. But McKee had that. I can't even make the questions up that McKee makes up. He had some brainy question about the dot plot, and Mike knows how much I detest the dot plot. And the answer is nobody knows where to put the dots. Into 2025. And so the uncertainty here, after the certainty of that election, Republican, is a really interesting mix into the end of the year, the December meeting, and then beyond.
Yep, absolutely, Tom. So some good comments from Susan Collins. Right now, let's get a reset here, Tom. Let's go to Lisa Mateo, get a Bloomberg Business Flash in New York.
You got it. And from the Bloomberg Interactive Broker Studio. Stocks retreating. The post-election rally stalling. Investors anticipating a slower pace of the Federal Reserve's rate cuts. Now, Boston Fed President Susan Collins just telling our Michael McKee that she would not take a December ease off the table. So we'll start with the S&P 500 extending declines after hitting another record high earlier in the week. It's now down about 1%, 69 points. The Dow down 0.7%, 304 points. The NASDAQ down more than 1%, 362 points. We have the 2-year yield 4.33%. That's down 1 basis point. The yield on the 10-year 4.47%, and that's up 3 basis points. To currencies, the dollar broke its 5-day winning streak. We have the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro, British pound weaker. We have Bitcoin right now a little bit lower, but at 88,000. Shares of semiconductor capital equipment company Applied Materials, their shares down 8%. It gave an outlook that raised concerns over chip spending. And then on the flip side, you have shares of AI software maker Palantir. They're on the rise, up 7%, after it said it was transferring its stock listing to NASDAQ from the New York Stock Exchange. And finally, Alibaba ADRs, they're lower. They reported a profit beat, but revenue came in below estimates, so their ADRs down 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
All right, Lisa Mateo, thank you so much. We appreciate it. Tom, McKee, Paul Sweeney, we're live here. Paul Sweeney, live here in Boston. We are at the Boston Federal Reserve Bank. The Future of Finance, that's the conference here, Tom. And I think what we've heard, I think you summarized it perfectly, this level of uncertainty, whether we're talking to an academic who's writing research papers on where this economy is going, or whether you talk to our practitioners who are in the market, trying to buy and sell securities and invest for the longer term. A little bit of uncertainty as it relates to trade policy, economic policy, immigration policy. Things have changed in the last 8-9 days, and I think the market's trying to figure out what that all means.
And one thing that we have not heard here in Boston, folks, and it comes up on the show constantly here in this special edition of Bloomberg Surveillance, is are we beyond the pandemic? And I'm just going to go to anecdotal here. In Boston, I think I got less work from home than I got in New York, totally unscientific. I'm making it up. But the answer is 3 economists just off camera here just look back at me and goes, you don't know what you're talking about.
Exactly. So I'll tell you, my anecdotal evidence, Tom, that I think drives with you. The airport was packed. The traffic now granted it was rush hour getting into Boston, absolutely packed, just like the good old days that I remember.
Yeah.
And then the rest, we went out for a couple of adult beverages last night.
No.
Good Irish pub.
I was in bed
packed.
at 6 p.m.
Went out to dinner, packed. So at least here in Boston, and it felt, what I remember about Boston downtown is just the streets really crowded because everybody's going meeting to meeting to meeting in different buildings, and the buildings are so tightly packed together that's how you do business here. And that's what I saw yesterday.
Reuters. I guess this morning, I should say. This is Gabriella Mello over at Reuters. J.P. Morgan weighs London HQ options. They may put up a Park Avenue tower at Canary Wharf.
Interesting.
They may upgrade 25 Bonk. They say Bonk over
Street,
there.
yep.
They're very Bonk. Or relocating. But, I mean, that's the sort of the fervor that's out there right now. And I noticed in the market off a little bit today that Fortress Diamond moves higher. So
yeah, absolutely. I mean, I remember my memories pre-pandemic for London were just construction cranes everywhere.
Yeah.
In the city, at Canary Wharf, all over the place. Obviously, that changed with the pandemic, but it's interesting. I think this Boston market feels very vibrant downtown.
And again, it comes down to nominal GDP. Part of the uncertainty that we're talking about, folks, here is taking in that inflation dynamic that Mike McKee was talking to President Collins about, and also looking at the real economy dynamic as well. And I think it's very safe to say, everything done, that the key mystery here is with or nominal GDP. And what we're hearing from David Gura and others is everybody's modeling out some form of path of Trump second term. Yep. And the answer is the pros are saying don't model it out, including Jerome Powell.
Take your time here.
Take your time, wait for the plan, wait, and see about power in Washington.
See about power. I think probably when you talk to some of these political folks, they say, pay attention to these appointments and let's see what the Congress wants to do, the Senate wants to do in terms of confirmation, what gets done, what doesn't get done. Does anybody have to moderate kind of their outlook here going forward? So I think what we've seen in the market since the election, obviously, was a risk-on attitude in the marketplace. That much is clear. Just take a look at Bitcoin, take a look at the equity markets, take a look at the bond market, take a look at the U.S. dollar, Tom. And the question is just a little bit of a pullback here today, which seems pretty darn healthy to me. But again, every day I think there will be more information for this market to discount.
One thing on the screen on the Bloomberg Launchpad, not switching trend, gold.
Yes.
Further souther.
Yep.
We got to get Gartman on. Did Gartman sell everything there at 10 p.m. election night? I don't know.
He peaked it out probably. Yeah. So good for him. All right, so we're going to have more coming up here. Tom, we're going to Michael McKee darken the door. He goes from interviewing Susan Collins and coming down to our studio to give us a few minutes.
Getting an
break
upgrade.
It down. Yeah, get a little debrief.
It's like an upgrade.
Yeah, we'll get a little debrief. So Michael McKee's going to join us here. Just looking at the markets, the S&P is off 1%. The NASDAQ is off 1.9%. The NASDAQ 100 off about 2%. Russell, the small capper, is doing a little bit better, off 1.2%. Yields, 10-year Treasury yield up 3 basis points, 4.46% here. The 2-year, 4.31%. So we're going to have more coming up. The dollar index, as you would expect, is higher. We're going to have more coming up from Boston. This is Bloomberg. Good morning.
Welcome back to a special edition of Bloomberg Surveillance from Bloomberg Radio.
Oh, how about that, Tom? We got some special little slick. Tom Keene, Paul Sweeney, we are live up here in Boston, Federal Reserve Bank of Boston. We spent 4 hours, lovely hours here this morning. The Futures of Finance conference, some smart people talking about the futures of finance and economics, and we grabbed a few of them over the last 4 hours, and we appreciate their availability. Michael McKee joins us right here. Like you were just talking to Susan Collins, Boston Fed president. I noticed, I was looking at some of the Bloomberg reporting, she did not take the December hike off the table. But I guess they're going to wait and see, number one. Yep. And number two, I think she very smartly and very adroitly parried your questions about potential future changes in economic policy that may be coming from this government.
Well, that's the hard part about being a Fed official in this interregnum between administrations, because everybody wants the Fed to come out and say bad things about Donald Trump since he said bad things about the Fed. And they're all being very circumspect and saying we can't make policy based on things that haven't been enacted yet. We don't know exactly what the Trump administration policies are going to be. And so we're going to, we're not going to factor that into our decision making for December at least.
Oh, wise one. I went back and looked, and in 1934, in the heart of the Depression, folks, the first round of the Depression, it got worse in 37. Mike McKee, the Treasury Secretary, was a member of the Fed. And the first legislation in 35 said no. And then there's a tip point with Truman in 51, and you know the history of McChesney Martin and LBJ and Vietnam and the rest. There's a heritage there of the Treasury Secretary being with the Fed. Does that precedence matter? Is it like a judicial thing where President-elect Trump can say 1934?
He could, but that has passed so much into history that I don't think it really carries any weight anymore. Ever since the Treasury-Fed Accord in the early 50s, they agreed to split the responsibilities, that the monetary would no longer support the fiscal. And it's become so ingrained in our system of government that it really... Nobody sees us going back to something like that. And even the people on Capitol Hill, most of them think that the Fed
Right.
should be independent.
The romance of this when we were younger is it was simple, Paul. There were hawks and doves. Are we ever going to get back to that simplicity?
I suppose it's possible if this is if the new normal now is the old normal, and we live in a world of elevated interest rates, then the amount by which you raise or lower interest rates becomes much more important. When you're at the zero bound, and your question is going to be, how long are you at the zero bound, or are you going to move rates by 25 basis points and stop? It really doesn't matter. Hawk and dove becomes a very amorphous concept.
It's a great bar. It's 2 bars down from J.J. Foley's.
If you in Washington D.C., if you look at where most of the members of the Fed are, they would say, well, essentially we're hawks because it's our job to keep inflation down. So we start from that position. Now there are people who, when you have a inflationary outbreak over the last 2 years, who were much more concerned about how high inflation was getting and thought they should move sooner. So maybe that's the distinction. When there's an issue, a wide enough gap in either the inflation rate or in the Fed rate, you're going to have people who are stronger or weaker in terms of how much movement they want the Fed to do. But all in all, hawk and dove is kind of not a reliable term anymore.
You know, we've seen, it was Tom and I have heard this morning talking to our guests here, a renewed concern about inflation maybe ticking back up. If you think about some of these new policies being envisioned by President Trump and his incoming administration, those could be inflationary and maybe substantially so. What did you hear today?
Well, in talking with Susan Collins, she said basically the same thing that Jay Powell said yesterday, and that a lot of the Fed officials have said, is that in the literature, in the textbooks, tariffs are inflationary. They add to prices, but they add a one-time rise in the price level unless you get retaliation and things keep going up. And that's part of the question of, what do we do here? We don't know exactly how this is going to play out. You shrink the labor force by deporting a lot of people, then that also adds to inflationary pressure because employers have to pay more because there are fewer workers. But we don't know if they're going to deport, how many they're going to deport, and how fast that's all going to happen. So, and taxes, of course. We could have a fiscal impulse. And as Susan Collins was telling us, all this is possible, but we don't know what's going to happen now, so we can't make policy based on what we don't know, since it might add a lot to inflation or it might not add anything to inflation.
Here we go, folks. It's going to be fun in the times, days, weeks, months coming up. Michael McKee, thank you so much for that. Michael McKee does all that economic stuff for us at Bloomberg. Tom, a busy, productive morning here for us, Tom.
Yes.
I think the Federal Reserve Bank of Boston, fantastic building in Lower Manhattan, right across the street from Fidelity.
I think there's a precedent set here in November. We need to relax for 4 weeks, but I'm seeing early January Federal Reserve Bank at Turks and Caicos. I think it really works out.
Exactly.
With McKee,
right.
of course.
Exactly right.
Remote on that.
Right. So we want to thank our friends here at the Federal Reserve Bank of Boston for hosting us this morning. Had a great time. Great lineup of guests. We got some academics, some practitioners, all thinking about the future of this economic experiment of America. Dave Matthews. This is Bloomberg Goodbye from Boston.
Up and down, pop his hair, fleas and texture.